Yo, what's up for y'all watching this on the YouTube replay? Here's how this goes. I really appreciate y'all. I'm going to do a quick portfolio update, show you a little bit how the market's going, and then I'm going to be reading the chat, get to some of y'all stocks, and then we'll analyze some of them. So let me give you a quick portfolio update. It's a kind of a mixed bag today. There are a lot of winners and a lot of losers. Like big tech, mega caps are green. Eli Lilly's down bad. I'll show you all this in a minute, but here's our main portfolio. We're down 0.7% on the day. Not too bad because we've had a pretty great year. I mean, we're up like in the past 3 months, 11%. And here are all the stocks that I own in here. All of them I read. Constellation Energy reported earnings this morning. The earnings were good in my opinion, and I'm just happy the stock didn't plummet. All my other stocks on earnings have been taken recently. Super Microcomputer, AMD, Toast, a lot of these other names. So I'm glad to see that this one is holding on to that pretty high valuation that it has. I mean, 27, 28 times 2028 numbers is not too terrible. But anyway, here's also my total percent change on every stock in here. You've probably heard of some of these names like Google, Meta, McDonald's reported yesterday, pretty good earnings. Oh yeah, then my Roth IRA, dang, the Roth IRA is down 3.2%, mainly from TSSI. This one is down 26%. The glad with these really small caps, these three right here, you got to be really careful with them because they have such small market caps. But I might be looking into buying a little bit more of those. Let me now show you also my buy and hold portfolio. So yeah, once I buy a stock in here, I try not to ever sell it. I try and just hold it for the long run. And Powell Industries is having a surprising rally. So they reported earnings. Initially, they fell 10%. Now they've recovered. I mean, this is pretty crazy. So I'm really happy with Powell Industries. And also, Amazon is another stock that fell on earnings, and it's actually had a very nice recovery. Apparently, they're going to be selling used cars on Amazon or something. I don't know. I didn't really read into that, but that sounds pretty interesting. I think that was part of the reason why the stock kind of gapped up there. So I did buy one more share of Amazon. Yo, what up, Wacky? How's it going? Yeah, happy Thursday, by the way. And yeah, and then finally, I want to show you the Webull portfolio. So this is my growth account. We're only up 12% all time in here. We've definitely underperformed and we're down on the day. But AMD is actually having a pretty nice recovery. Check this out. AMD's up 5.5% on the day. Really good. Robinhood is nearing an all-time high. We're up almost 700% on this company. I regret every share I've ever sold. Yeah, look at that chart on Amazon. I mean, Robinhood, pretty ridiculous. Yo, what up, MFCA? What's up, guys? Yo, Huckleberry, what's up, man? We'll look at Honest too. Yeah, I think they reported earnings. They're a small cap as well. So yeah, these are the stocks that are up on the day, but let's see what's down on the day. Yeah, Disney's down. I might be looking into Disney. I mean, oh, of course, our huge loser right here, UiPath, we're down 50% on that company. I love being transparent. CPRX reported yesterday. I guess the earnings weren't good or something because, the market just didn't like their earnings or something. I haven't looked into them yet. We could look into them in a little bit. Oh yeah, actually, I want to show you the watch list right here. If we go over here to my entire watch list, oh look what's up today. Hanes brand, like that, like the sock brand or whatever. Papa John's Pizza's up 10. But here's the bad news. Look at what's down today. We have a lot of red stocks. So Airbnb's down 10, Krispy Kreme's down 10. They're showing higher losses from the McDonald's partnership ending. Uh, McDonald's and Krispy Kreme in $2,500 or 2,500 McDonald's stores, they tried to sell Krispy Kreme donuts. It didn't end well. Some stores like had no sales, so they ended the partnership. Yeah, this is all the big losers today. Anywho, yeah, let's go see what y'all are up to. UNH, Fortinet. Oh yeah, Bogdan, dude, Fortinet. Let's go check out that company. So FTNT, this is one of my favorite cybersecurity stocks, and I'm shocked to see them down a huge chunk today. Yeah, look at that. Before today, they were a $97 stock. Now they're 72. So let's see what this kind of article says. Amid challenging environment. Okay, I'm not going to read that. But let's go see what their earnings were because we can see them right here. So they met on revenue, beat on net income, and beat on EBIT slightly. So they met expectations. Maybe it was something bad in the guidance. I do love this company because of the industry. They're in the cybersecurity industry. Also, look at this right here. 40% of this company's revenue comes from their subscription business. This is one I would maybe put on your watch list. Actually, let me put it on my watch list in this account on this show. But look at their subscription revenue right here. I mean, it literally just hits a new record every quarter. I mean, it's most of their revenue now. And if we go to it on an annual basis, I mean, this is kind of the trend you want to see for a subscription company. I mean, just really good growth rates. And that's all reoccurring revenue. And look at this. Yeah, this is the net income, the after tax profit. I mean, they're making 500 million of net income a quarter. Pretty solid. So, yeah. What should I invest in if I'm first starting? And again, not financial advice here, but S&P 500, and invest in some companies that you know and heard of before, like me. Google, Meta, McDonald's, those are the ones I own. Here's my Robinhood portfolio right here. And I love blue chip stocks like McDonald's, United Rentals, Meta, Google, like stuff you use. Coca-Cola maybe. So yeah, what up, Luffy? Good time to buy, you think? Yeah, Fortinet might be worth looking into. I wonder what's the real reason they fell so much. It must have been guidance. What up, Terrence? If you were to give 5 star, yeah. Again, I'll show you what I've kind of just been buying recently. I'll be really quick about this. Progressive is one I've been loading the boat on. I just bought some more shares of them about 2-3 days ago. That's that little buy circle right there. I bought some more Progressive. That's like an insurance company. T-Mobile looks really interesting right here. I've also been kind of dollar cost averaging into this one. So T-Mobile's a cool one. But there aren't too many great deals out there, to be honest. Oh, and another stock, actually, Amazon's looking attractive right now. So I did buy a share of them again 2 days ago, one more share of Amazon. And then the last thing I bought was actually some Coca-Cola Consolidated. This is actually the Coca-Cola bottling company, not to be confused with the main one. But this one trades at a dog cheap valuation. You get nice dividend growth here. I mean, look at this. You get a near 1% dividend yield, and the payout ratio is only at 5%. They have lots of room to raise it. The PE is a 16. They do major buybacks. Here's the power of stock buybacks. And here's what I mean about this. So the net income is up 8% year over year. All right. But your return as EPS, net income per share, is up 16%. So what part of the ratio changed? The share part. There's less shares that exist, meaning the net income is spread out through 8% less shares. They literally bought back 8% of all the shares that existed. Anyway, very cool company there. All right, let's keep going here. What up? What's the app now? Yeah, hey, I'm actually on a broker right here. If you do want to get it, someone said, yeah, hey, it's right there. It's in the link tree in my bio, the very first link there. If you want to get this little thing I'm on, right, this software, it's an affiliate link too, so it helped me out. You know, you can get we'll get us some stocks. But anyway, let's go look at some more. Nebius is cooking. Yo, that's actually a company owned by Nvidia. So if we go to Nvidia's portfolio right here, you know, they got to make it public. One of the stocks they own is actually Nebius. So wow, look at that, up 21% on the day. That's actually an incredible performance. Let's go see. I remember this is such a growthy company. Check this out. If we just go to the sales right here, you know, I wouldn't just buy a company because Nvidia owns it. The financials make me compelled to look at this one more because they're so growthy. I mean, look at this. The sales went from 11 million to 55 million. That's a near 400% increase year over year. So I bet you they kept up that growth rate. So anyway, they're pretty cool. They're really growthy, owned by Nvidia. I don't know if I'd buy them after the huge gain, but that's something I am interested in. All right, let's keep going here. So, thoughts on hymns? Yo, what up, Dave? Yo, so let's check this out. Yo, Miguel said APLD. Yo, I'm so sorry. I didn't even. We'll look at APLD as well. Let me look at hymns real quick. Remind me to look at that one, and I got you. So, dang, yeah. Ever since earnings, this one has kind of been falling down and down. You know, unfortunately, they lost their partnership with what's it called? They used to sell this weight loss prescription. They ended their partnership with NVO, which is Ozempic. So they no longer sell a weight loss prescription, which was leading to a lot of their growth. But first off, they're still continuing the growth. I mean, revenue's up 73% year over year. Crazy growth. And that's what they honestly just need to keep that up. They sell some other stuff. But this net income was honestly the best part. I mean, they're going to be making like 200 million plus in net income a year. Really good. I don't know what happened to their balance sheet. I think they acquired a company. Let's see what happened to their cash. So, wow. Okay. So they have $1.14 billion of cash. They must have issued some debt that I got to look into, but there's some kind of notes. I don't know. So I would be interested to see, because that didn't come from the net income. So that came, maybe they issued shares. I don't know. Oh yeah, hey, thanks, Jello. Yeah, again, if you want to get this little brokerage that I'm on, this software, it's in the link tree in my bio, first link there. See like all the super investors portfolios and stuff like Nancy Pelosi. Ooh, Eli Lilly. We got to look at Eli Lilly. Hey, yeah, try not to spam there, Isaiah. I got you. I see all the chats. Don't worry. Wait, let me get a look at the Honest Company and APLD. So Eli Lilly today tanked 15%, and this is one I'd highly consider looking into. I've never seen them drop so much. Sorry. I need to get my water, and I don't know where it is. My coffee is gone. So anyway, here's Eli Lilly. Here's what I love about them. They're super growthy, and check this out. So they sell this. They sell a bunch of prescriptions, as you know, like Mount Jaro, for example. Look at the growth here. This is why I'm impelled to really look at this one. They missed on like one product, but anyway, the growth has been ridiculous. I mean, in 2022 is when they created it, did 500 mil of sales. Now it's 11.5 billion. I mean, 4 billion just this quarter. They continue the growth. And then they have Zepbound. This is their Ozempic competitor. This is a weight loss prescription, and they just released this weight loss prescription, and it just blew up. It literally released in Q4 2024. Now it's 2.3 billion in revenue just this quarter. So ridiculous. And that's just two of their subscriptions. And they have, what is this one? Verzenio. That one's up 10% year over year. And at Trulicity, see, that one's down. So anyway, yeah, Pran. Yeah, if you want to get this little software I'm on, this brokerage, it's in the link tree in my bio. First link there. Let's see if they're earning. So they beat on revenue, they beat on net income, and they triple beat on every metric. So they must have had some sort of there must be something I don't know there. I haven't looked into them because I don't own them, but I do really like them. APLD stock. This is another company actually owned by Nvidia. You know what? Let me go back to the Nvidia portfolio so I can show you that. Again, don't just buy a stock because Nvidia owns it. But here we go. Nvidia's portfolio. And so basically, APLD and CoreWeave went into a huge partnership. I really think that was orchestrated by NVIDIA. So this has kind of been a high momentum, high growth name. So basically, APLD is a data center hosting and cloud service business. Yeah, look at this data center hosting business. All the revenue comes from the US. Basically, they just had a huge partnership with CoreWeave. Thoughts on T-Mobile stock, Joby Aviation? I'd be careful with Joby Aviation. I think they're still a revenue-less company. But what up, Zio? How's it going? Let me show you. I do own T-Mobile, by the way, so I do want to be transparent. I think I'm slightly down or maybe slightly up on them. Where are they? Here we go. I got 5 shares of T-Mobile. I do think this one's going to be a winner in the long run, and they just had a huge partnership with SpaceX, which is pretty cool. Let's see, TMUS, and they're also a huge buyback company. You won't believe the stock buybacks this company does. It's at a pretty fair valuation, a PE of a 22. I believe this company has the ability to maybe go to a 25 PE because of their margin expansion. They also just finished acquiring a business. It literally happened just a few days ago. Yeah, T-Mobile closed its acquisition of Array Digital Infrastructure Wireless Operations. Anyway, they just acquired a new company, which is great news. That's going to be some additional inorganic growth, but still growth nonetheless. So look, if you look at the revenue, here's why they're doing so good. The revenue's up 7%. But the net income's up 10% year over year, and it's been even better these other quarters. But basically, they've really expanded their net margin. They had a record 15.2% net margin. If we zoom out, this was a low margin business. In 2021, it was a tough buy in this stock, 5% low single digit net margin. But this margin expansion is why a lot of people are really happy with T-Mobile. 15% net margin. Now, what about the free cash flow? Yeah, look at the FCF, which stands for free cash flow. They're printing a couple billion of free cash flow every quarter. That's after debt interest payments. Really cool. So what is T-Mobile doing with this money? What is T-Mobile doing with $3 billion in net income a quarter? Well, if we go to the cash flow statement, we can see how much buybacks that they're doing. And check this out. They're literally they spent $2.5 billion on buybacks, 2.5. They spend billions every quarter just buying back their own stock. And the dividend cost just under $1 million. Oh, and because of the buybacks, look at the power of this. Because they buy back their own stock, whenever they buy back those shares, they don't have to pay dividends to those shares. So that's how the cost of the dividend actually went down to under $1 billion because they bought back so much of their stock. So again, pretty cool. Look, and here's also the power of the buybacks that we can see. If we look at this right here, net income's up 10%. All right, so net income's up 10%. But your return as a shareholder through net income per share is up 14%. Anyway, that one I went a little longer than normal, but that's why I own them. Super shareholder-friendly company, acquiring businesses. I love them. So let's keep going here. Yeah, the buybacks are crazy, dude. They bought back 5% of the shares. Yo, what up, Crispy Taters? What's up, man? Yo, I bought some Progressive today. Yeah, nice, dude. You know what? We'll look at Progressive Corp too. What is the future on Super Micro? Let's hopefully growth to come back and margins to come back. Super Micros, they tanked 20% yesterday. I do own them, by the way. Check this out. So Luckily, I don't own much in them, but yeah, huge gap down on Supermicro. Are the numbers out? Oh, they are out. So look at this again. This is the bad news. Revenue is up 7, but net income's down 31. What's that mean? Margins collapsed on Supermicro. So because they're giving customers like bulk deals, so I want to see the margins kind of come back on them. Just added some Supermicro. Hey, nice, Zio. I own a little bit of them. You don't want to have a huge chunk of your portfolio on like a Supermicro computer. But let me look at Progressive Corp. So this is another kind of boring one, but a great company just buy and hold for the long run. Like you wouldn't really trade this one. You would just buy and hold them forever. I think they're at a pretty fair valuation, with the market at all-time highs, and this one isn't. We can look at the PE ratio compared to the industry average. Like check this out. PE's a 13, industry average is a 12. I think they deserve a slight premium valuation because of how growthy they are. This is an insurance company, so if you have no insurance exposure, maybe check out this stock and they're super growthy. Premiums on their personal lines are up 23% to 19 billion just this quarter. So not just incredible growth of the sales, but of the profits. Net income's up 117%, triple digit net income growth is ridiculous. So again, another margin expansion story. Great growth. Revenue's up 20, net income's up 100%. So we go to the margins here. I mean, incredible, incredible, highest margin ever. So and also, they are frequently rewarding shareholders through special dividends. So normally they only pay you 10 cents a quarter, but every January they pay you a special dividend. They did $4.50 this January. That's a huge. That's an instant like 2 or 3% instant return through a dividend. So pretty cool. Yo, what up, GSHBR? What's up, man? Chewy. Yeah, so I don't love this company, to be honest with you. This is kind of like a not one you'd buy and hold forever. This is one you'd probably want to trade. I just don't see too much out of. I would probably expect just the S&P 500 to return a little more than this. The growth is a little here still. So this is the good news. If we look at the revenue, it's up 8% year over year, 3 billion. The net income's they had a little one-time adjustment that quarter, but they're actually making net income every quarter. So actually, it's better than I thought. So they should be making net income every quarter, probably like 40 million. I think this is like the online pet delivery service thing. A bit leveraged of a balance sheet. It's actually not too terrible. It's better than I thought. I actually thought the growth was lower than this. It's actually good. Last quarter was 15%. That's actually surprising. So I wonder what happened. Did they like buy a business? No. Maybe the business is coming back. Who knows? Uh-oh. Sorry. Hopefully, did that disconnect my microphone? Okay, we're good. Okay. All right. What company was that before Chewy? Oh, that was Progressive Corp, ticker symbol PGR. Oh, and I do own Progressive. Again, none of this is financial advice, by the way. I'm not an expert, but here's my position. I own 3.8 shares. And by the way, I sell nothing. I have no course. I have no book, Discord, WhatsApp. I got none of that. So watch out for people impersonating me. I'll never DM you or anything like that. So let's keep going here. Oh, yeah, let's look at the honest company. My bad. I keep forgetting to get to... This is like another company that's just like not great. I mean, they just sell a commodity. They just literally sell diapers and wipes. That's 70% of the business. Dang, they're down 19% today. So it's like an eco-friendly diaper and wipe. So let's go see why they fell 18%. It's probably because I'm just gonna guess they lost net income. Let's go see. So slight beat on revenue. Let's check out EPS. Oh no, they made net income. They beat on net income and they beat on EBIT. So they triple beat. So there must have been some bad news then. I don't know. I mean, we can go to the intelligent kind of comments here. The EPS beat. Yeah, hey, I don't know. I know they're also debt-free as well. Maybe they issued debt or something, but kind of look, here's the one thing I do like about the honest company. If you look at the market cap, this is a $408 million company. And if we look at the cash on hand, they have $72 million of cash with basically no debt. So I don't know. That's not the most recent quarter, though. They did just report again, so I don't know that. But oh, yeah, let's go look at Duolingo. So DUOL, another monster performer. It's lost some of the game, but still, wow. Still, 15% is a great day. Probably just lower in the RSI on that one. But yeah, Duolingo is one I've been talking about. It's so growthy. I don't believe it. Let's go see what the earnings were. So beat on revenue, huge beat on net income. No way, 91 cents. So, it's updated. Okay, let's see. That's 45 million of net income, up 83%. What was the sales up? Sales were up 40, net income's up 80. So they doubled their margin to a 17%. This company has near 20% net margins. What about the free cash flow? Free cash flow. Yeah, that's what FCF stands for. Is up 60%. These are great numbers, man. They deserve it. Look how growthy they are. You won't believe this. This is what I love about Duolingo. It's like that language learning app. They basically sell the subscription so you don't have ads on the app. And look at the growth. It literally just goes 40, 50% every year, every quarter. Just hits a new record. They also have a little advertising business. It did grow 38% year over year. Pretty cool to a new record. Again, that doesn't have the most recent quarter, but this is Q2, the most recent quarter. So, really good. Deleverage your balance sheet as well. So even though the assets went down, it's great news to see that this ratio went down as well. So that's when it's actually okay. I've seen this happen a bunch of times with like DocuSign and a bunch of other companies. So see how much cash they have. Duolingo, 1.1 bill of cash. And look at this, 121 in short-term investments. So what this means, cash short-term investments, this means these 1 to 3 week treasuries. I was listening to how they do it. They basically just keep some of their cash. So you always look at cash and short-term equivalents, but they keep their cash in these 1 to 3 week treasuries and earn like 4 to 5% annual yield, but they get their money back in 3 weeks or less. They basically just milk earn interest on it. Hey, hold on. Try not to spam here. All right, let's see here. Uh-oh. That's not what I meant to do. Oh my goodness. Okay. You know what? I accidentally followed you. Okay, that's not what I meant to do. All right, you know what? Let's keep going here. See Visa, please. Yeah, let's check out Visa. So we can look at Lululemon as well. Yeah, what up, Cat? We'll check it out. So anyway, here's Visa stock. Dang, they're down 3% on the day. I wonder if it was any specific news. I mean, I'm not seeing any specific news. You know, Visa's a good buy and hold for the long run, dividend growth company. If we look at this net income right here, I mean, you know, these small credit card transaction fees that are slowly bankrupting us are making, you know, Visa and Mastercard a lot of money. They're literally making in after-tax profits $5 billion of net income a quarter. And they share that with you in a dividend, you know, near 1% yield, only a 20% payout ratio, and they also do major buybacks. I mean, if we go to the cash flow statement, let me actually verify that. Yeah, look at this. They're spending $4 or $5 billion every quarter solely just buying back their own shares. So let's see how that's helped out the EPS. So the net income is up 8%, but your return as a shareholder is plus 12% because of the buybacks. Hey, yeah, that's why you got to buy profitable companies. I mean, these unprofitable ones can't buy back their own shares. I mean, anyway, those are the kind of companies I look for. Visa's a good buy and hold for everyone, but let's go check out Lulu. This is one I almost trust a little more than Nike right now. So, but unfortunately, they've been bleeding out like crazy. Again, I wouldn't own Nike or Lululemon for the long run. I just don't think they're really going to outperform. But this one might be worth nibbling and might be worth looking at because this is a huge oversell. I mean, it gapped down on earnings, bled for another 10 days, and now it's bleeding again. So what's the PE on this company? Is it like a 12? Literally a 12 PE. So that's the lowest PE, which is price to net income, lowest multiple they've ever traded at. And let's see how much they're making. So the margins did fall a bit, but I don't think it justifies this much of a stock price decline. Like, look, sales are up 7, net income's actually down 2. So again, yeah, what that means is the margins fell nearly 9% year over year, but that's not too big of a deal. I want to see because they don't pay any dividends. Are they doing any share buybacks? They are. Lululemon spending nearly 500 million every quarter. Jeez, dude. So let's see. Net income's down 2, but let's see. I bet the EPS was positive year over year. It was up. So look, the EPS still grew 2% year over year despite negative net income. Hey, Lululemon, major buybacks on that company. I have Lululemon shares. Hey, nice spread the wealth. Hey, yeah, I didn't actually know the buybacks were that they were doing that much. They're spending like pretty much all their net income on buybacks since they don't pay a dividend. Um, let's see. Let's see. Sezzle. Hey, yeah, well, hey, I already looked at Eli Lilly. Dave, if you want to, by the way, if you missed anything on the stream, go on my YouTube channel. I'm streaming on YouTube as well. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. If you want to watch it on there. If you miss anything, you replay it. We'll look at Eli Lilly again in a minute here, but hey, here's Sezzle right here. This is one of my favorite fintechs out there. I think they reported earnings this morning. Maybe not. No, post market August 7th. That's today. So actually, in 3 hours from now, we'll get earnings from Sezzle. So that'll be very interesting. But this is what I love to see. This is incredible growth, 123% year over year revenue growth. But look at the total revenue. It was 104 million, and on that, 36 million of this was net income. So incredible margins on this company. Check this out, 35% net margin. So the margins are incredible on this company, and it's like real as well. This isn't like fake. So super growthy. That's one I have on my watch list. And ticker symbol Dave fell. They're like that's like their main competitor. They always move together, kind of. Where's ticker symbol Dave? I lost a lot of money on them the other day. Let's see. So yeah, look at that huge gap down. This company pretty much does exactly what Dave does, or Sezzle, but yeah. Do you think Progressive is a buy or why? Oh, hey, I love Progressive. I actually just went over them a minute ago, so I'll cover them later. I'll write them down on my little journal here. But yeah, great, super growthy company, just super profitable. I mean, look at this net income, 3.2 billion, up triple digits. Revenue also just hits a new record every quarter. Net income's at a new record. Margins are at its highest it's ever been. So they do special dividends. I just think that's a nice buy and hold for the long run kind of stock. I actually bought some shares of Progressive yesterday or the day before. So I do think so. Oh, someone said it's Amazon. Yo, what up, Builder? Yeah, Amazon. I did buy a share of them a couple days ago. Apparently, the shares are going higher today after they announced they're going to be like selling cars or used cars on Amazon or something. But anyway, Amazon's been another margin growth company. Like sales are up 13, net income's up 35. So incredible double-digit margins now. You know, it used to be a tough single-digit margin business. It's even negative. So they've really grown their margins, which I love to see on Amazon. And huge AWS growth. Has anyone heard of the AWS? It's the number one cloud provider. It's actually the most valuable part of Amazon. It's well over 100 billion of annual revenue for them, and just in the most recent quarter was 31 billion of revenue. So crazy. I love Amazon's like an ETF in one. They're way more than just their little online website shop. So they're a robotics company, advertising company, subscription model. So let's see. Eli Lilly. We'll be quick about this one, but yeah, this one fell 15% on the day. Let's see. Well, let me read. Eli Lilly show significant growth. Why did stock drop? Zepbound increased. Oh, so okay, so 38%. That is slowing growth because so basically their two main products, Mounjaro, which is 30% of the whole business, only grew 38% year over year. It's had monster performance anyway, so I don't actually mind that. I mean, look at this. They literally just made this product out of nowhere in 2022 with 16 million in revenue, then 100 mil. And just in the most recent quarter, it's 4 billion in the past 3 months. I mean, ridiculous growth. Also, Zepbound. This is their weight loss prescription, like an Ozempic competitor. Was 175 million. Now it's 2.3 billion. So anyway, if they're on my watch list, maybe I can buy them if they go lower. Let's see. Any impact on tariffs? What up, Sam? Give me a trade where I can enter closing my eyes. Yo, I would buy McDonald's stock and just never sell. I don't know about that one. United Health Group. So this is another healthcare play that's kind of been bleeding out. Unfortunate if you own this one, but I think it might be worth a nibble. But there are some real risks here. That's why the PE has collapsed. So yeah, if we go to this PE ratio, which is the net income multiple, it's at like the lowest it's ever been because I gotta get my dang water. Oh my goodness. Okay, found my water bottle. Okay, sorry. So PE is a 10 because of future uncertainty. There's a real chance if this company gets accused of fraud, they get kicked out of Medicare and Medicaid for 5 years. So, and their margins did collapse. Look at this. I mean, this was already priced in, of course, but regulators are not happy with UNH and these Medicaid providers, and UNH has had some shady fraud stuff. So, that I could see if they go lower. So that's why if I would buy that one, I'd be very, very cautious. Not you can't have a meaningful size position and then maybe a nibble or something on the company. Yo, what up? Hey, Nurse. No way. Thank you so much, Nurse. Asia. I'm probably saying that wrong, but thanks so much for the rose there. I appreciate that. If you got a stock you want to look at, let me know. People keep saying BBAI. Hey, you know what? This is not a stock I really like. Blake said, "Can someone tell me what app he's using?" Yeah, hey Blake, this is actually a brokerage that I'm on. If you want to kind of get the software I'm on, it's in the link tree in my bio. That very first link there. It's an affiliate link too. So if you deposit $100, we'll both get some free stocks. But anyway, BBAI. Here's the thing I'd be careful with. $1.9 billion company. All right. $1.9 billion company that just in the past 2 quarters have lost over 200 million. So just that is over 10% of the market cap they've lost in net income. And I want to see this kind of grow more. I mean, the revenue's up 5% year over year. I mean, it's the same that it was. And I just don't see much value here right now. I wonder what the future projections are. Yeah, I don't know. Expected to not even make net income for a year, so I don't, nothing's really blowing me away there. It's just high momentum right now. That one's we'd probably trade that one. I wouldn't really buy and hold that one for the long run. Yo, Jesse, what's up, man? Happy Thursday. Yeah, hope y'all are having a good day, by the way. Let's see, Astera Labs. Yeah, Steven, I love this company right here, ALAB. They had a nice little gap up on great earnings, and this is one that's on my watch list. I'd love to get exposure to this stock. They just continue to win. If we look at their what they reported versus the analyst expectations, huge beat on revenue, huge beat, double beat on net income and on EBIT. So triple beat across the board. This revenue growth continues, after being up 620% from the previous year, it's up another 150% to 200 mil of revenue just this quarter. And on that 200 mil of revenue, they made 51 million in net income. They're extremely profitable now. What's the net margin? 27% net margin. I mean, this is the kind of stock I can see why they're continuing to win. And this is one I'd like to buy and hold for the long run. And look at this fortress of a balance sheet. They have literally no debt whatsoever. And let's see how much cash. 1 billion of cash, up from 830 mil. So that's the kind of stock that I'd buy and hold. Why don't you have any Apple stock? Hey, I do not have any Apple. I have other mega caps, but I love Apple. I would happily buy and hold them. But yeah, I have Google, Meta, McDonald's. Constellation Energy reported this morning. Let's go. I'm just glad that stock isn't down on the day. All right. Let's see here. What do you trade? I mainly don't really trade. I mainly just buy and hold great companies for the long run. In this portfolio specifically, this is my buy and hold portfolio. Again, I have my this. This is my risky portfolio. We've definitely underperformed. We're only up 12% all time in here. But yeah, we have some of the more pop. Dude, Reddit has been crushing it. Some of these other names as well. We're down bad on some stocks. I just like being fully transparent. If you got any questions for me, let me know. So let's see here. Yeah, Martin, we can look at Constellation Energy. They did report earnings this morning, and they're slightly down. And I'm okay with that right here. This is actually my largest holding in here. I have 15 shares worth 5,000. So most of that is gains. 2,000 of that position is gains. So I'm super happy with this position. This is actually the largest nuclear energy play in the world. They own the most amount of nuclear reactors out of any other publicly traded stock. And the future is so bright for them. As we know, energy demand is super high, especially for clean power like nuclear. Like one of their 3 Mile Island restart is literally whenever they get that nuclear reactor up, it's solely powering the whole reactor. It's just powering one Microsoft data center. So, they have deals with Microsoft, Meta, a bunch of companies. All right. And they're merging with Calpine. It's instantly accretive, $2 a yearly EPS and $2 billion of free cash flow a year. So let's keep going here. Yeah, if you guys got any stocks you want to look at, let me know. We'll check them out. And Ben said USLM. I haven't heard of this one before. So United States Lime and Minerals. So they sell like limestone or something. I don't know. But the stock has done incredible since 2019. Wow. This was a $20 stock and now it's 100. So let's go see what they do. So lime and limestone operations. Wow. I mean, apparently limestone is on fire because these are some good year-over-year growth rates, 20% year-over-year. Let's see, are they profitable? Yeah, man, look at that. They're making like 30 million and plus in net income a quarter. Dang, they have high margins. Who knew limestone had such high margins? I mean, 30-40% net margins. So, hey, I'll add them to the watch list. That's really interesting. The free cash flow is really good as well. And this is a really good balance sheet. Holy smokes, ain't no jokes. They got 320 million of cash, record amount of cash. Yo, that's actually a pretty cool company. I mean, hey, if you want exposure to limestone, great fundamentals here. 0.2% yield, only a 5% payout ratio. I'm glad you told me about this stock. They're actually kind of cool. Those are good financials. All right. NVO. Okay, this is Novo Nordisk. They reported earnings this morning. Okay, wow. Or maybe it was yesterday. They're up 7.5% on the day. So that's great news. So what is this company? This is the company that owns Ozempic and Wegovy. So those are those weight loss prescriptions. And so yeah, look at this. 94, basically 95% of the revenue, all of it comes from their obesity care products. So the PE has collapsed though, which is unfortunate, but I think I know the reason. And I think it's oversold. I think this is overdone, but the PE is a 12 because um their patent expires in 2027 for their Ozempic patent, but the incredible revenue or profits continue. This is net income after tax profits. They're making 4 billion plus of net income every quarter. It's up 45% year over year. What's the margins? 35% net margin grew 17%. They have a nice dividend, a 3.6% yield. It's safe. So I actually think the risk reward's pretty good on that one, but you do the PE is so low right now because of the uncertain future. So you're gonna catch that Visa falling knife. Maybe, Visa's one that I would like to eventually get exposure to. I do love that company. Can you check AA, please? Let's check it out. Alcoa. I haven't heard of this one before. Hey, we can look at MicroStrategy too, MSTR. It's like a Bitcoin proxy, but check this out. $7.7 billion company, but the stock has really been flat. Like it's the same price that it was back in 2018. So that's kind of unfortunate. So they sell aluminum. Okay, so it's a commodity stock, but the commodity prices have been booming. I don't know if it's because of tariffs or whatever, but look at this. The net income's ridiculous over here. Deleveraging their balance sheet. What's the revenue? So revenue's up 3, but this net income's up crazy. Like what the margins? Oh, even a 5% net margin makes them a lot of money. So anyway, I guess if you want exposure to uh aluminum, that's your play there. It looks like the net income's doing pretty good right now. Let's see. Oh yeah, MicroStrategy, MSTR. So MicroStrategy, this is like your Bitcoin proxy. So if we kind of look at the market cap, this is a $113 billion company, and that's mainly from all of the Bitcoin that they own. They've successfully been able to dilute the shareholder and just buy Bitcoin with it. So if you go to the balance sheet right here, what happened? How did it go from 7 to 64 billion? Well, they diluted the shareholder by about $20 billion, bought 20 billion of Bitcoin, and that Bitcoin they bought at like 60, 70,000 is up like crazy. They've also just bought like a couple billion at 117,000 more Bitcoin. So really this company just trades at its Bitcoin value. Usually whenever Bitcoin goes up, they sometimes go up a little bit more. So they're interesting. All right. What is this one? RAYA. All right. Hopefully this isn't a small cap. So, okay, yeah, we don't really cover these kind of stocks on here. I mean, if you look at the market cap, how much the whole company's worth, it's only worth 10 million. So it's kind of a scary number. Someone said Nebius earnings. Yeah, I'll be quick about this one because uh, they're up like crazy. I wouldn't really buy them after the huge rally, of course. But anyway, check this out. If we go over here to the Nvidia portfolio again, we can see what stocks Nvidia owns. One of the stocks they own is Nebius. And again, just because Nvidia owns a stock doesn't mean you should own it. You should go look at the actual fundamentals and see if it's something that you can trust. And for me, I love the growth here. The revenue, again, it's really small numbers, so it's kind of easy to grow, but it went from 11 million to 55 million. As long as I keep up this growth rate, what's it going to be this time next year? Still got to be careful of some of these net income losses, though. They'll kind of outgrow that. Let's see. Yeah, they made 105 mil of revenue, beat by 4%. So pretty cool. Thoughts on the bullish IPO? Oh yeah, they're like a $4 billion company, really small market cap. So I am curious to see what will happen. Someone said AAL. So this is American Airlines. To be honest with you, I just don't love the airline industry. This isn't really going to outperform the S&P 500 in the long run, in my opinion. Um, but let's go check them out. So they don't pay a dividend. So yeah, look at this choppy net income. I mean, in a recession also, this company will lose a boatload, and they did. Like, anyway, I don't when I just look at their net income, it's just really choppy. I don't really think I could trust American Airlines in the long run to outperform. The balance sheet, they have more liabilities than they have assets. So I would just be careful with American Airlines. I mean, I would maybe swing trade this one, but I don't really trust it. Yeah, like look at the stock; it's like an all-time low. So I wouldn't really buy and hold them forever. All right, now let's see here. What app is this? Yo, hey, FNC Media. Yeah, I'm actually on a brokerage right here. If you want to download this little software I'm on, it's in the link tree in my bio, the very first link there. It's an affiliate link too, so it'll help out the channel. It's a free app, but if you deposit $100 and like buy some stocks, we'll both actually get 5 free stocks. So it'll help out. Anyway, let's keep going here. Ooh, ARM. Yeah, that's actually another company owned by Nvidia. You know what? Let me go back to the Nvidia portfolio right here. Nvidia is one of the largest shareholders of ARM. Actually, I don't know about that, but they own a bunch of it. It's their second largest position behind CoreWeave. And ARM collects a lot of royalties, and they're making a lot of net income. They make like the energy efficient chips, but check out this net income. I mean, they're making pretty much 100 to 200 million of net income every quarter. Really good balance sheet as well. Absolute monster of a balance sheet. And the one thing, let me see if I can scroll back and find to where it said that. I think it was like early on. It used to like divide it and show me exactly. Oh, come on, Moomoo. Let's see if I can find it. So yeah, look at this. Um, I used to split it up like this. 70% of the revenue comes from their royalty streams, their royalty revenue, which is all high margin, and then they have the license revenue. So pretty cool. 40% of the revenue comes from the US, and then they're in all these other companies. 19% comes from China, 15 Taiwan. So anyway, ARM's cool. Let's see here. Yeah, try not to spam. I'll get to all the stocks here. Don't worry. Yeah, we don't really talk about crypto really, but we'll look at BRBT, Rocket Lab, UNH. Yeah, we'll check them out. So anyway, here's SoFi Technologies. This is one I love. One of my favorite fintechs out there. They have had absolute insane growth. And I think they really deserve to be at this $22 level because of how growthy they've been. Look at their financial services business specifically, because this has seen a crazy growth. It's up 101% year over year, literally to a new record. So that's incredible growth on the financial services business. And the lending business has also seen nice growth, 25% year over year. So if we go to the net income as well, people are really taking them serious. They made 100 million of net income of profits this quarter. Revenue's up 42. So, I mean, super growthy company. I really like SoFi. Super innovative. I do own them, by the way. So I would be careful. I wouldn't, you know, uh, have a huge position in them, and I might be biased. Tom said, yeah, hey, Tom, again, if you want to get the software I'm on, it's in the link tree in my bio. First link there, it's a broker. Wait, BTBT, Bit Digital. I think this might be another like Bitcoin mining company. So again, $900 million market cap. Well, let's just verify that. Oh, no, they're not. So 60% of revenue comes from the cloud services. Then they have the digital asset mining. So it does look like they do mine some stuff. And look at that. 3% of the revenue comes from Ethereum staking. Made them 500,000 this quarter. Let's see the cloud service business. How's that doing? Well, actually, let me just go down here. So not great. I guess it did. It is tough comparing from last quarter, which was up 270%, but the revenue did fall 17%. I think investors would have liked to see more growth. So that's why I think this company's been flat for a while. Again, the Bitcoin mining companies don't really outperform Bitcoin, which is tough. So Rocket Lab as well. So RKLB, this is my favorite space company. And yo, what up, Jay? Well, check out Tempus AI as well. That's a Nancy Pelosi company. So you think it'll push higher than 22? I think it will eventually on SoFi. So here's Rocket Lab. They have a huge backlog, like literally a $1.5 billion backlog of orders that they haven't fulfilled yet. And they're actually super growthy. Like I'd stay away from Lunar, stay away from ASTS, Space Mobile. I'd buy Rocket Lab. That's my favorite one. Really growthy. Revenue's up 45% year over year. And they just acquired a company for like a couple $100 million. So that's going to add to their already good growth. So it's inorganic, but it's still, I'm glad they acquired another company. That they're doing the right thing there. All in on Palantir. I put my life savings on Palantir, and I'm not lying. Yo, Vin, I would recommend, again, not financial advice, but I mean, that's been the best move so far. But I would have a diversified portfolio. Like I could not. It'd be tough to. This is a volatile stock too, but anyway, it's been a good one to own. Check this out. They trade at a pretty ridiculous valuation, 123 price to sales. So not price to like profits, not price to net income, but price to revenue is 130 or 123. But here's why they might deserve a high premium. I think it's too high of a premium. But look at this government revenue. These government contracts have been insane. It's at a new record, up 49% year over year. A lot of police stations use their government like software, and also the commercial revenue with like S&P 500 companies up 50% year over year. So incredible growth on both segments of the business. The net income's 330 million at a new record. The balance sheet is an absolute fortress. If we go right here to the cash on hand, it's up $2 billion. It went from 4 billion to 6 billion in cash with no debt at all. So anyway, everything about them is super, super growthy. But let me look at Tempus AI real quick. Then we'll get to UNH and some of these other ones. We've already looked at UNH and Eli Lilly, but we'll get to them in a couple minutes here. I don't want to repeat them so quickly, out of respect for the people that have been watching. I sold Rocket Lab at 27. Hey, Rocket Lab, one thing I would be careful with, they do lose a lot of money. No ASTS. Yeah, Thexy. I'll look at ASTS. They actually don't sell anything. They have no revenue. Unlike Rocket Lab, which is really impressive. But here's Tempus AI. Here's what I really like about this company. I'm actually surprised the stock isn't doing better. Genomics business is up 88%. I mean, look at that huge bump. I mean, and it's organic too. They didn't like acquire a company to get that. So incredible growth there. And also incredible growth on the data and services business. It's up 44% year over year. So really good growth on both segments of business here. They aren't net income positive yet. I mean, they still lost 70 million, only 13 mil last quarter. But I love the growth of the sales. I mean, 75% year over year. And look at the deleverage of the balance sheet. I mean, if we kind of zoom out to right here, they always had more liabilities than assets. Look at that. Terrible. But now they're in the best position ever. They have actually a quite bit more assets than liabilities. So anyway, everything's headed in the right direction on Tempus AI, in my opinion. I do believe Nancy Pelosi and her husband do own that company as well. I think we can by the SEC law, she has to make all her trades public and stuff. You know what? I'm not going to look for it. But anywho, yeah, we can see all of her holdings right here. Let's see. Symbiotic. Ooh, didn't they have? That's a really good robotics company. KB said, look into robotics. That's the next industry after AI. First off, Amazon is the best number one robotics play in the world. But in second place, in my opinion, I don't know. I haven't looked at all the robotics companies, but my second pick right now would be a Symbiotic, SYM. This is a warehouse robotics company, and their main partner is with Walmart. And they have such a large partnership, so much so that Walmart decided to buy 14% of all the shares. So 14% of all this company is owned by Walmart, first of all, which makes sense. And let's see what their earnings were. So they're still losing some money right now, but trend is somewhat getting better. The revenue only grew 25%. I think that might be why the stock's down 14%. It showed some slowing revenue growth. It normally always grows like 50, but it's still up 25%. That's still really good. But yeah, basically they're a warehouse robotics company that helps out warehouses like Walmart. All right. Still holding my Duolingo. Yo, Millers, dude, heck yeah. That one's got to be doing great, right? TPL. Hey, yeah, this is a royalty company. So this company basically owns a bunch of land in Texas in like the Permian Basin, and they collect a bunch of royalties from oil streams and water wells from all the land that's on it. So they are struggling today. Look at that. They're down 7%. So I've actually been kind of looking into this company right here. They make a lot of money. They have no debt too. Like, look at this. Over 100 million of net income a quarter. They're different from your normal oil and gas stock. They have really high margins, 61% in margins, mainly from the royalty streams from the other business that bumps up their margins. But anyway, look at this balance sheet as well. They have no debt at all, and let's see how much cash. 550 mil of cash. So pretty cool company. Here's the cash from operations as well. 150, 120 mil a quarter. They also do some special dividends sometimes. All right. I'm in at $60 on Roblox. Hey, Roblox. So that's a company owned by Kathy Wood. So you know what? Let's pull up the Kathy Wood portfolio. And here's Roblox. Check that out. That's her second largest holding now. So Roblox, this one has had like absolute monster performance. Yo, no way, traditional development. Thanks so much for the 5 roses, dude. Yeah, my bad. What's the ticker symbol on that one? Traditional. I got you. Let's check out Boston Dynamics as well. So here's Roblox, though. Here's the reason I think they've been doing so well. Check this out. If you look at their active users, actually, not just active users, but daily active users. It's 111 million. That's a record. It's never been over 100 million. At the same time last year it was 80 mil. Now it's 111 million. So that's really, uh, blown away all expectations. The free cash flow is really strong here. Look at this, a couple 100 mil of free cash flow every quarter. But one bad news is this net income. So why is the net income negative 200 million a quarter while free cash flow is positive? That's because of stock-based comp. They're literally paying their employees like hundreds of millions of dollars a quarter in stock. They are a bit leveraged as well, but anyway, that's why the net income's negative. Stock-based comp is included in GAAP net income and not free cash flow. So I'm watching the stock-based comp and the net income there, but yeah, they're interesting. Really growthy right now. So let's see, Boston Dynamics. It's ticker symbol BSX. Thanks again, man, for the rose there. No, let's see, Andy. Yo, thanks so much, dude, for the rose as well. If you got a stock you want me to look at, let me know. What app? Yeah, hey, Mound. This is actually a brokerage right here. If you want to get this software I'm using, it's in the link tree in my bio, the very first link there. It's my favorite app for analysis and stuff. And it's an affiliate link too, so if you sign up and deposit $100, we'll both get some free stocks. So anyway, here's Boston Scientific. This stock is at a near all-time high. Look at that. They've done great since 2019. Let's see what they do. So they're in cardiovascular and med surg. How's that doing? Look at that. At a new record, up double digits, 15% year over year on the med surg business. Pretty good. And look at this, the cardiovascular business. Look at these monster year-over-year growth rates. For a healthcare company already at $3 billion of revenue a quarter, these are really good year-over-year growth rates. So I can see why this one has done so well. Let's check out the net income down here. Wow, look at that, 800 mil of net income. That's the most profitable ever. So look, revenue's up 22, but net income's up 150%. What does that mean? It means they're growing their margins. Net margins are up 100%. They went from 7 to 15. That's the most impressive part. No dividend on the company, but that's quite all right. That one, I'll put them on my watch list, actually. I like the growth there. See, good companies with good fundamentals, it usually makes sense why the stock does so good usually. And hey, Miller's in traditional. Thanks again for the rose, dude. Yeah, thanks so much, Miller's, for the rose there. Hey, thanks, Northern Jays. I appreciate you, man. Yo, Northern Jays, did I get to your stock? What was the one you want me to look at? Let me know again. I forget. I got you. Yo, read about Rich Tech Robotics. Yeah, Rich Tech Robotics. That one I wouldn't buy compared to like an Amazon or a Symbiotic. Here's the thing about Rich Tech Robotics. I'll be super quick. $209 million company. So first off, they're a micro cap. They're a $200 million company with literally doing 1 million of sales every 3 months. So they have no IP, no patents. Like there's nothing good here. Nothing worth really looking into except the balance sheet. But this is all just cash on hand. They have 40 million of cash from issuing a bunch of shares and no debt. They fortified their balance sheet thanks to this kind of momentum right here. But it's a $200 million business. Most of it is from cash. They don't have any like real good products and no revenue, no growth. So anyway, I got to get to my charger real quick. Let's see. Wait. Also, I believe they're into robotics as well. Which one was I looking at there? BSX. That's really cool. Let's see. What was I looking at? Hey, try not to spam there. I'll get to all the stocks here. Let's see. Chuck said UEC. This is actually a uranium company. They actually bought a uranium mine from Rio Tinto. So, they own like one uranium mine, but basically they have just been moving with all the uranium stocks. They have a really good balance sheet, no debt, and let's see how much cash. Well, $71 million of cash, but really good balance sheet. But for right now, I don't think they have much revenue. Actually, I stand corrected. The revenue just blew up. Basically, we're trying to buy a bunch of uranium from the U.S. The U.S. is trying to buy uranium from Canada. We stopped buying Russian uranium from other companies. We're trying to be more mineral independent. Especially because we're poking other countries on a stick. What's your thoughts on DocuSign, a dead company? Hey, Millers, thanks again, man, for the roast. I appreciate that. And traditional development, thanks again for more 5 roses. Yeah, DocuSign, this is one that's been a real underperformer. I don't see any real reason to probably just buy and hold this company. I do own them just because I bought them a long time ago, and it's just been like a never sell position, but nothing's really blowing me away here. I mean, 7% growth year over year, single digit growth. They are just now getting net income positive. So they're making like 60 mil a quarter. But yeah, besides that, the free cash flow is pretty good. They're making like 200 mil of free cash flow, but most of that's being eat up by stock-based comp. That's why the net income's only 72. So DocuSign is just basically, I'm just holding it just because I'm up so much on them. I bought DocuSign. Let's see, wait, dude, I bought them. This was years ago at this point. I mean, that's where I bought my shares. Just been holding on ever since. Yeah, it's kind of like a UiPath and like I own DocuSign, I own Zoom. Kind of just dead companies. I mean, look, I'm down 53% on Zoom, 50% on UiPath. So they could just end up being like a loser in the long run. Let me go grab my. Oh, I'm on 9%. I have a minute here. All right. Oh, Zeta. Hey, yo, that company. Actually had some pretty good earnings, right? Ooh, so yeah. Still, this is really good. They're way up from before earnings. What happens? Yeah. Hey, Mo, I'm on a broker right here. If you want to get this software, I'm on Linktree in my bio. Very first link there. It's affiliate link too. So hey, Zeta Global too. Let me show you this. I love the growth here. I'm actually surprised the company's not up more. Let's see. So they beat on revenue, they beat on net income, and on EBIT. So they triple beat just slightly. And yeah, here's these net income losses. So the losses are narrowing. They lost 55% less net income than the previous year. The revenue growth is very strong, up 35% year over year. Balance sheet's really good. They've deleveraged. I mean, liabilities used to be 62% of the assets. Now, after growing the assets, they're only 38. So cash from operations is very strong as well. What's the actual free cash flow number here? Yeah, 33 mil of free cash flow, up 70%. So anyway, that one, you can see why they're up on earnings. Wendy's stock, yo, what up here? So I feel bad if you own this company. Wendy's is at an not all-time low. Let's see. Well, yikes. So again, this is a dividend trap right about now. If we go and look at their dividend right here, it's hard to trust that. So the dividend cost $1 a year, so they got to be making 25 cents of EPS a quarter. Let's see if they're doing that. This needs to be at 25 cents. Yeah, so the dividend payout ratio is over 100%. Luckily, it's not the end of the world. They're still making net income every quarter, so they can cut the dividend. But it's a tough industry to be in right now. I'd rather definitely just pick McDonald's. So yeah, I don't know. I'll be careful with Wendy's. Oh, what up? W Day stock. Shark said, I have had BSX for 6 months, but hasn't moved a lot. Hey, yeah, the growth is still really good there. I'd just hold on to them. Wouldn't really sell out of them. Maybe I'd trim them, but I wouldn't sell out of them. You see the Apple news? Yo, we'll look at the Apples. We'll look at Apple stock too. AMAT. What up, Brian? So here's Workday. Let's check them out. So WDAY stock. Is UPS a dividend trap? I think so, Ferris. And I'll remind me to look at that one as well. I want to because the past 2 quarters, they couldn't afford the dividend. So here's Workday, huge company, a $60 billion company. I know software has kind of been being hurt right now. Like if you look at Adobe or Salesforce, they've been struggling. This is a subscription business. So look at this, 91% of the revenues are subscription business. And look at the growth here. I mean, this is still really good. I mean, if you kind of look at it on an annual basis, I mean, that's the trend you want to see. 7.7 billion, up 16% year over year. So nice growth there. Are they profitable? So they are profitable, but looks like the net income did decline a bit year over year, but still, well, the revenue growth did slow, 12% revenue. So anyway, software, I'd like to see the growth be a little bit more and the net income come back a little bit, but let's see about the free cash flow. The free cash flow is still doing really good. Wow, they made $1 billion of free cash flow last quarter. So yeah, that's a cool software play. Yeah, we'll look at PayPal too. Let's see here. The Apple news. Oh yeah, AAPL. So we'll look at Apple, Applied Materials, PayPal, UPS. I want to get to all of these. I'm probably going to forget some of those, but remind me to look at those. So here's Apple right here. They just announced they were at the White House. Dude, did y'all see? Tim Cook, the CEO of Apple, gifted Trump a literal golden statue of Trump's face. It was kind of weird. But anyway, I'm not kidding about that. You can look that up at the White House. Anyway, Apple, great news. They're up like crazy on this. This is why I love this company. This is like a buy and hold forever kind of stock. Check this out. They have a huge smartphone market share, 19% smartphone market share. Half the revenue literally comes from the iPhone. I'm on an iPhone right now. A lot of people are locked in the Apple ecosystem. But watch this. The services business is the most valuable part of Apple. If you go spend $100 in the App Store, you go buy $100 worth of Clash of Clans gems or buy an app, 30% of that revenue literally goes back to Apple as a royalty. They call it a software development fee, 30% cut of every transaction. And it's all high margin, near 100% margin for them. It's nearly 100 billion of annual revenue for them. So that's been a huge growth driver. They also sell Macs, wearables like the AirPods and the watches, and then the iPad. Also, here's why Apple is a bit affected by tariffs. Like, did you know only 36% of Apple's revenue comes from the US? Then you got EU, that's 25% of all the revenue, China's 17%. So that's why they're a bit affected by tariffs. And Apple also has the largest buyback program of any stock on earth. So check this out. They're making like 25 billion in net income a quarter. What is Apple doing with all that money? Well, I want to show you the buybacks that they're doing. This is the incredible part. And yeah, hey Pringles, this is a broker that I'm on. If you want to get it, it's in the link tree in my bio, first link there. But look at this right here. They literally spent $21 billion solely buying back their own stock. They spend that nearly every quarter, 20 billion plus on stock buybacks every quarter. So what does that do? That actually gives you a lot of returns as a shareholder. So look at this. Though the net income's up 9% year over year, net income's up 9, your return as a shareholder via EPS, earnings per share, since the shares part of the ratio went down, you're up 12% year over year. So that's the power of the buybacks Apple's doing anyway. They can easily afford to invest 100 billion. They spend 20 billion plus on buybacks a quarter just for fun because they have nothing else to do with it. Apple's so big, Apple can't acquire a company. They're already the biggest, so the regulators wouldn't allow it. So they just buy back their own stock. So yeah, anyway, if you want to get this broker that I'm on, yeah, hey, it's in the link tree in my bio, first link there. It's an affiliate link too. So if you deposit $100, we'll both get some free stocks. But all the analysis tools are free. You don't even have to deposit. But anyway, let's keep going here. I wanted to look at the Trade Desk and AMAT. What up, spread? Let's see here. AMAT. Someone said there was a huge partnership. That Ryan said had a partnership with Nvidia. So check this out. Yeah, the stock is up 2.3% on the day. Looks like they gapped up this morning. Let's go look at their financials right here. I haven't looked at them actually in a while. So let's go analyze them. Sorry, my Wi-Fi is kind of buggy. Oh, I need to get my portable charger, man. My phone's on 8%. So, wow, Applied Materials actually trades at a pretty cheap valuation. What's the industry average? I mean, isn't industry average is a 24? They're at a 22. So, below industry average. They are in a semiconductor systems, Applied Global Services. How's that doing? It's up 2%. Semiconductors up 7. So, that's probably why the PE's 22. They're growing single digits. So, I think investors would like to see a little bit more. So, yeah, look, and revenue's up 7, but net income's up 24. Wow, they're making like 2 billion in net income a quarter. That's really good, actually. Yeah. So they have some really strong net income numbers. You get a 1% dividend yield, a very safe payout ratio, only a 16% payout ratio. So it's like a mixed bag there. I would like to see a little bit more growth, but they're pretty cool. So let's look at the trade desk right here. And then I want to look at UPS, man. UPS, I'll show you how you can analyze for yourself if a company has an unsustainable dividend. We'll look at that one after this. Yeah, hey, sorry, I need to have this pinned. Again, if you want to get this app I'm on or brokerage, you can just type it in Google. It's called Moomoo. But if you want to use my affiliate link, you can get this brokerage that I'm on. It's in the link tree in my bio, first link there. It's a brokerage called Moomoo. And if you deposit $100, we'll both get some free stocks. Anyway, here's the trade desk. This is an advertising company. And the reason the stock fell so much right here, they're a TV advertising company. Basically, Netflix dropped them as a partner. Netflix used to use the trade desk to find advertisers on their new ad tier subscription. But now Netflix just does that themselves. They gapped down on earnings, then bled for another 20 days. But they're finally recovering because they're realizing that's not the end of the world for trade desk. They're still a great company, growing their margins, super growthy. Look, revenue's up 25% year over year. So really good revenue growth, but net income's up 60. So again, another company that's growing their net margins, very good. So this is an advertising play for TVs. Also, Amazon just had a huge partnership with Roku. Roku's kind of a cool company too. But I do like that one. Wait, here's how you can tell for yourself if a company has an unsustainable dividend. So let's pull up UPS right here. This one actually has a crazy dividend, and I think it might be unsustainable, and it might have a cut in the future. So if things don't change. So check this out. They have a 7.5% dividend. You're supposed to get 8% a year in the S&P 500 on average total return. And this is the whole yearly return just in dividends. So let's go see if it's sustainable. Here's how you check that. So first, we just see how much they're making every quarter. They made 1.3 billion of net income just this quarter. So remember that they made 1.3 billion of net income just this quarter, and the dividend cost 1.35 billion of net income a quarter. So they at least need to be making 1.35 billion of net income a quarter just to be able to afford the dividend. Like already I wouldn't buy a company that most of the net income is just eaten up by dividends because they have no leftover money to do buybacks or reinvest in the business, buy another business without having to issue shares or dilute you or issue debt, So I can see why this one hasn't done too good. All their net income is being eaten up by, or over 100% of the net income right now is being eaten up by the dividend. If they go back to 1.7 billion a quarter, that'd be a lot better. But at 1.3, I mean, it's tough. Anyway, that's UPS on the dividend. Oh, what up, Joshua? He said Duolingo. Heck yeah, dude, that one's up crazy today. Y'all remember that they reported earnings yesterday? That's that language learning app. Pretty boring, but these are not boring returns. The stock is up 18% today. Incredible beat. Every metric beat. So if we go down here, they beat on revenue. They beat on net income by a huge gap. I mean, they were expecting 60 cents of EPS. They made 90 and a huge beat on EBIT. So if we look down here, net income was a record 45 million this quarter. I mean, incredible. If we look at the revenue and the balance sheet, dude, they deleveraged their balance sheet like crazy. Everything's looking great here. The assets went down, but this is typical. So the liabilities are only 36% of assets now. This is great news. Like DocuSign did that and some other companies. But look, revenue's up 41. And in continuing this growth streak, revenue's up 41, net income's up 83. Again, that means they're growing their net margins. What's the gross margin? 72% gross margins on this company. Yeah. And most of their business comes from their subscription revenue. And look at the growth here. I mean, it just grows 50% every quarter, every year. It's a new record. And they also have a small advertising business that grew 38%. But cool. Duolingo, I can see why they're up 17% on the day. I mean, they deserve it. They're so growthy. So they're cool. They're like they're that app on the App Store. All right, let me get. All right. I got my portable charger. Because my phone's getting low here and it's lagging me. Okay. VOO is tanking today. Yeah, let me go see how the market's doing real quick. Yeah, why not? So I am down 0.4, or actually, it just updated. No, we're down 0.65% on the day. Yeah, look at Google and Meta. They're starting to bleed out right now. McDonald's too. Let's go see the SPY. Yeah, the SPY is down 0.5. Nvidia is about to go negative. What about Apple? Apple's still holding on to all of its gains, up 3% on the day. Good news for Apple. So, yeah, Q's, let's pull that up real quick. Not great. All right, let's go back here. So, Palantir PE is, yeah, dude, Palantir price to sales is at like 120. So it's kind of high. 424, and it was 440. I'm down 5%. Dang, Joshua. Oh, man. My dog is Colombian. Yo, what up, American Penguin? What up, NU? What's up? If y'all got any stocks you want to look at, let me know. Thanks for showing up to the YouTube stream. So Datadog and Lululemon, yo, we'll pull up Datadog first, and then we'll pull up Lululemon. So, yeah. Oh, we could look at Vistra. Yo, Vistra's up crazy thanks to Constellation. Or maybe they reported earnings today as well. I don't remember. But here's Datadog. This company got added into the S&P 500 on this day right here. So if you own the S&P 500, technically own a little bit of this stock. So they rallied on that news, and now they've sold it all off. I wonder what happened today. Did they report earnings today or something? Like, why was that candlestick weird? Well, let's see if they did. Here's the revenue. They beat on revenue, missed on net income, but beat on EBIT. So it was like a mixed bag there. I don't know about this one. I mean, I'd like to see the net income get a little bit better, but I do like this industry. I think they're in like the cybersecurity industry. So yeah, honestly, that probably wasn't too helpful. I apologize. So Lululemon, and let's check out this one. So they just sell a commodity. They sell shorts, leggings. Look at this downtrend. I mean, absolute nasty. I think it's oversold probably at this point. The PE is a 12. Industry average is a 22. I don't know if that's right, actually. I think Nike, that should be Nike. No, that's TJX. So yeah, they're kind of mixing the industries here, but let's see. Number of stores, Lululemon has 770 stores, and the best part is just the net income they're making and the buybacks. So check this out. Net income's down 2% year over year, but because of all their buybacks, the EPS, which is net income per share, is up 2.3%. So there's less shares that exist with the same amount of net income, so that's why the EPS is up a lot more than the net income. They're spending a lot just buying back their own stock because they think it's undervalued. I guess it hasn't been too well timed because the stock is the lowest it's been, so um, I guess now would be a great time for them to buy back their own stock. But yeah, they're making a couple $100 million a quarter, spending it all on buybacks. We're watching the margins there. It's a tough industry. Nike also has been struggling. Louis Vuitton has been struggling like crazy. I look at Nike, down bad. Like 2022, they were 170. Now they're 70. So Lululemon could go lower, but I think it might be worth maybe a small nibble there. What do you think about Super Micro Computer? Oh, and MP Materials. Yeah, I would stay away from Super. I still think Supermicro might be a bit overvalued. I'm not happy with their margin numbers, but I'll look at them in a little. Oh, Dutch Bros, they were going crazy today, right? Oh, dude, Joe, we cannot look at Under Armour. UAA stocks at like an all-time low. What program is this? Yeah, hey, Adam, this is a broker. If you want to get this app, I'm on Linktree in bio, first link there. Affiliate link too. So anyway, here's MP Materials. This is a rare earth mineral play, and they just had a huge partnership with the literal U.S. government. They want to open this one rare earth mine that'll supply the U.S. with certain minerals for literally the next like 30 to 50 years. So that one's kind of a rare earth mineral play that finally got some good good momentum from that government deal. We're trying to be more mineral independent, not rely on like Russia and China for all these rare earth minerals. And Supermicro, let's see. So I do own this one, by the way, but I'm up 80% right now. Or let me just pull that up real quick. And I have a super small position in them because they're risky. So if you do want to buy some Supermicro, I wouldn't have it as a huge position. I bought this one during the accounting shenanigans down here, but and just kind of held it ever since. And I have been kind of disappointed. So here's kind of the bad news about Supermicro. Let's see what they did. So they missed on revenue, missed on net income, and missed on EBIT. So they triple missed. I can kind of see why they fell. So revenue's up 7, but here's the bad news. Here's the margin problem I was kind of talking about here. Let me pull up net margin. Net margin fell 38% year over year, so the net income's down 34. So tough break for Supermicro. Those margins are given customers like bulk deals. Yeah, hey, I forgot to look at this one. Let's check out PayPal. So can you look at PayPal and PayPal USA stablecoin? I don't know what that is, but look at PayPal stock. This one's it kind of looks like a DocuSign. Like the stock is down bad since 2021, but they're also spending like all their money right now solely buying back their own stock. So I want to pull that up actually. So let's see. The PE is super low as well. Look at this, like a 14.5 PE. They own Venmo as well. But check this out. If you go to the net income down here, I mean, they're making nearly 1.3 billion of net income every single quarter. And what is PayPal doing with 1.3 billion in net income a quarter since they don't pay a dividend? Well, they literally spend more than the net income every quarter. They're spending 1.5 billion every quarter solely buying back their own stock. So what does that do for you as a shareholder? Well, check this out. Net income is up 11, but your return as a shareholder through EPS is up 19. So they bought back literally 7-8% of all the shares that existed just in the past year. Super buyback friendly company, and they're buying back their own shares at a good 14 PE. So I get it. Pretty cool. Oh yeah, VST. Let's see. So Vistra Energy, this one is up on the Constellation News, or they reported earnings today as well. So let me see. Oh, they did report earnings today. So let's see how they did. So they missed on revenue. So actually we don't have all the data yet. So this has not updated with the most recent quarter, but basically this is like the second biggest nuclear reactor play. Energy demand is crazy in the US, and this is one of the main beneficiaries. I actually own kind of their main competitor. I own CEG, which is a more pure play nuclear energy play. But yeah, they've performed very similarly. Both are at like near all-time highs right now. So yeah, that's a Vistra. What is this one? UHS. Yeah, let's check it out. Universal Health Services. So a $10 billion company, pretty small market cap. It hasn't been performing too well. So they have a really low PE, an 8 PE. What's the industry average? It's a 15. So you can kind of see, especially the past year here, how the multiple is way lower than the industry average. Let's see if we can find out why. So, I mean, they're still growing. I mean, 9% year over year of revenue growth. What about profits? What about net income? Let's see here. Net income. Oops, here we go. There we go. Net income is up 23%. So they're actually making a lot of money. Wow, this is actually really good. They're growing their margins. They're making 300 mil plus in net income a quarter. So yeah, free cash flow is a good couple hundred million of net income every quarter too. So actually this company's not too bad. I mean, they're growing their margins. Actually, I really like this one. Nice point 0.5. Actually, I really like this one. Look at that. If they did a 10% payout ratio, you get a 1% dividend yield there. That's kind of easy math. Actually, I wonder why the PE is so low there. I like that one. And buying back your own stock is not really good. Yeah, hey, Northern Jays, I'd rather a company, instead of doing share buybacks, like go acquire a business, or like I agree, reinvest in the future. And that's what Comfort System does. They're known as a serial acquirer. They acquire so many businesses like every quarter. Really cool. So like a lot of their growth, like Comfort Systems, if we go to this this revenue growth, it's a lot of it is from all of their acquisitions that they're doing. It just hits a new record every quarter, and also it's done wonders for the earnings per share. I mean, after going 100%, grew another 74% record. So that's a cool company. All right. Oh yeah, Dutch Bros. Let's check out them. Sorry, sorry if I don't get to all the stocks here. I try and get to all of them here. So here's Dutch Bros. They're up 18% on the day. So they're actually they were selling off because of Starbucks and Chipotle. They reported some not so good earnings. You had some red flags from them, but Dutch Bros is doing great. 91% of the revenue comes from their company operated shops, and it's just seen some really good growth. For a restaurant in this environment, Dutch Bros is done very well. And let's see how they did. So they beat on revenue, beat on net income, and beat on EBITDA by like 10%. That's really good. So yeah, look, revenue's up 27, net income's up 73. Ooh. So that means they're growing their net margins really good. So yeah, near 10% net margin now. So nice for Dutch Bros. Doing better than Starbucks right now. Starbucks is doing rough. Matthew said, please do Reddit. Yeah, man, Reddit has been one of my best performance stocks. And that's because their ARPU, their average revenue per user, is up like 40% year over year. They're literally making nearly $4 per user of revenue a quarter. So it's crazy. So anyway, check this out on Reddit. First off, a lot of people think this is a meme stock, but just like forget the name Reddit. Let's judge them based off their financials. So check this out. After their revenue grew 53% from the previous year, it grew another 77% to 500 mil just this quarter. And on the 500 mil, they're the most profitable they ever been. 90 mil of net income just this quarter. They have an absolute monster of a balance sheet. I mean, this is why Reddit's no meme. If you look at their cash on hand, they have 2 billion of cash, no debt at all. Cash is earning interest. Free cash flows off the chain up 300%. So that's why I think if we judge Reddit off their financials and not off their name Reddit, it's a great company. Someone said, and you own it? Yeah, I do own Reddit actually. Check this out. In my risk on portfolio, it's been one of my best performers. Yeah, right here. I own 4 shares of Reddit I got in at a pretty good time on Reddit during this dip right here. But yeah, we got 4 shares of them at around $100. So yeah, incredible growth on them. Tesla, hey, yeah, we can look at Tesla too. Where you from? I'm from America. Um, let's see. I love her and Jeremy. Wait, thanks, Matthew. I appreciate that. We can look at Tesla. Hey, try not to spam there, man. I'll get to all the stocks here. Oh yeah, we'll look at WDB. You follow Joseph Hogan? I haven't watched him in years, but I know who that is. Oh, Salesforce. Yeah, we'll look at Salesforce and Chipotle. Yeah, we're looking at Salesforce after this one, and we got to look at WBD. Want to get to all this. So, check this out. You're funny, Co. So, anyway, here's Tesla right here. Here's why, again, we judged Reddit. We forget the name Reddit, and we judge them off their financials. If we do the same thing for Tesla, it's not too good. So if we judge Tesla based off their financials like we would any other company, this is one that I'm just staying away from. I think it's too risky. First off, this PE is 190. Industry average is 25. So it's okay to have a high PE as long as you're high growth. But Tesla just lost their growth. Like their total vehicles delivered year over year are down 14%. Actually, if we go right here to the automotive segment, which is 88% of the business, it fell 12% year over year. And even the energy business fell. If we go to the energy generation, it's down 7.5. So both segments of Tesla are down bad, and the margins also collapsed. So revenue's down 11. Net income actually was down more than 15. We can see they had a little bit of accounting tricks because the operating profit was only 930 mil, and the net income should not be higher. unless they did some like there's some little one-time adjustment they had that made this go higher, but they really made around 800 million of adjusted net income. So margins are actually, again, it's a tough quarter, but again, the huge growth on Tesla is going to come in the future from robo taxis and robots. But in my opinion, I can't pay that high premium right now. That's just what I think. So I just stay away from that one. They're cool though. There's just other opportunities, I think. All right, let's see. I'm driving. Yo, be careful there, Wassinator. Do you have a YouTube that gives a method? Yeah, hey. Yeah, Wassinator. Yeah, if you guys want to subscribe to my YouTube, that's actually the best way to support me. Um, my YouTube channel is called Nathan Robert. I'm also streaming on there right now. So if you go to type into YouTube Nathan Robert, I'm streaming on there as well. If you miss anything, you can watch it on the YouTube replay. I stream every day and also make YouTube videos. I just made one about some stocks I bought. So yeah, but that's the best way to support me. Just subscribe to the channel, watch my most recent video, leave a comment, say you came from TikTok or something. And by the way, I sell nothing. I have no course, I have no book, I have no Discord, WhatsApp, Telegram. I have none of that. Literally just on to give my opinion. So please watch out for people impersonating me. Only thing I do have is a YouTube channel. So yeah, let's keep going here. Someone said APLD. So yeah, that's a company owned by Nvidia actually. If we go back to the Nvidia portfolio down here, APLD, again, you wouldn't always just want to buy a company because Nvidia owns it, but that's one of the reasons it's kind of been so growthy. Also, them being owned by Nvidia has helped them because Nvidia helped them get a partnership with CoreWeave, and that's really why they gapped up right here, and then they gave some good guidance on it again, so that's kind of why they're up on earnings. Still high momentum, still losing a bit of net income every quarter, so do beware. Open door, please. Hey. Yo, traditional. I cannot view. We don't look at crypto here. I can't find crypto. So fortunately, I don't think I'm going to be able to look at that. I just can't find that if I type it in here. I do apologize. But here's Open Door. So Open Door Technologies. This is a company I would stay away from. Even now, wow, the volume's 120 mil. But look at this right here, the market cap. This is a $1.3 billion company. So you're buying in at a valuation of $1.3 billion. Well, you're buying a company that actually, this is great news that this is narrowing. This is, oh, they reported earnings yesterday, so that's why that updated. But before this, they were losing like 100 million in net income a quarter. So it's actually great news to see these losses narrow. Revenue's up 3%. Basically, this company's begging for a lower interest rate environment. You know, if we go back to 2022, this was nuts. I mean, 5 billion, 3 billion in revenue every quarter. Now it's just around a billion, 1.5 billion. So we want to see low interest rate environments come for this company. But again, I'm just staying away from that one. It's just, they also are diluting the life out of you. So be careful with that one. Hey, yeah, no problem. Traditional. Thanks again for the roses. I do appreciate that. Let's see. Yo, what up, Catherine? How's it going? Hey, thanks for showing up. Can you do Fubo? I'm excited to see some news. I don't think there's a lot of upside for Fubo. I think the most they could do is like double to the value to the Disney valuation of $6. But besides that, there's not too much you can really do here on Fubo because 70% of the voting rights are owned by Disney. So, and also my side of the bet is actually Disney. So that one's a fun little swing trade, but I'm just staying away from that one for that reason. I do own Disney, by the way. So, dang, look at Disney on his earnings. Let me go look at Disney earnings actually because I do own this one. Is it updated on here? It is, right? Yeah, wow. So the free cash flow growth has really been the main winner here, up 41%. Did they do buybacks? So if we go to they did. So they bought back 2% of the shares that exist every year. Anyway, operating profit was up 5. So yeah, revenue only grew 2% year over year. That might be a little thing investors aren't too happy with on Disney. All right. Let's see here. But Fubo's interesting. Tell me about Rockstar Games parent company. Oh yeah, that's TTWO. So yeah, if you're looking for exposure to Rockstar Games, if you want to own GTA 5, Red Dead Redemption stock, check out TTWO. This is Take-Two Interactive, and they also here's the coolest part about this one. Why they've kind of been so growthy is because they have this asset called GTA 6. Whenever they release GTA 6, it's literally going to be one of the biggest games of all time. As soon as they release it, it's literally going to bring in billions of revenue. So they're growing now because of the future growth that's coming in the future from GTA 6. You know, there's a lot of grown people that'll pay up like a couple $100 for this game and they'll pay a subscription or something. I don't know. So they're just going to make a boatload of money off that new game. It's going to be one of the biggest games in history. GTA 5 is already in the top 10 in history. I know. We're still waiting on GTA 6. So yeah, that's kind of that one. TPL's at an extreme support buy-in. Yeah, TPL, this one's really interesting. That's that basically this company owns like 100,000 acres of land in the Permian Basin in Texas, and they let oil and water companies on their land, and they collect a bunch of royalties. So they have high margins. They make over 100 mil a quarter. So I wonder why they're falling 8% today. I wonder why they've kind of been bleeding out. That one is interesting. So let's see. Oh, hey, Costco. Qubits earnings was today. Let's see. Did they really report earnings today? Let's see how they did. Qubits, hey, they're only down 2.2%. That's great news. Let's see how the earnings were. So revenue. So the revenue was 3 million and the analysts were expecting 2.5 mil. So that is a big beat, but again, the market cap still scares me on this company. $5.8 billion company that just did 3 million of revenue in 3 months. They do $1 million a month or for the past 3 months. So I'm still being I'm just staying away from that one, but the momentum on that one's huge, especially for the quantum space. Does Moomoo Cash Sweep block your money? No. Yeah. Hey, look, Cash Sweep, you can spend this money at any time. So yeah. Yes, sir, John. Oh yeah, if you want to get this brokerage that I'm on, if you want to get this little software I'm on, it's a brokerage. It's in the link tree in my bio, first link there. If you deposit $100, we'll both get some free stocks. I like to keep my stocks in here and I keep my cash in here because it earns you the nice little APY daily interest. I made 6 cents. Why not? And it's lowest fee. You don't have to pay $5 a month. It's a free lowest fee. Anyway, let's see here. Costco. Hey, I love that. Like grocery store. So to get into a Costco, you need a subscription first of all. So Costco already makes this high margin subscription fee every month. Oh yeah, Salesforce. We got to look at Salesforce. So my bad. We'll look at Salesforce after this. But yeah, Costco, you have to have a subscription to even get into a Costco. So that's what makes them a lot of money. And whenever you buy stuff there, you're buying stuff in bulk. So you feel like you're getting a good deal. Well, you are getting a good deal instead of buying stuff individually. So check this out. They're making a lot of money, nearly 2 billion of net income a quarter. They pay a dividend. They sometimes do special dividends. So they're just really well run. The valuation is a little high, but 55 PE. What's the industry average? 41 is the industry average. So they do deserve a premium, but I would be a little careful with Costco at that valuation. I'd love to get into them though. Perfect business, one I'd hold forever. In terms of business and management, incredible. It's kind of like Palantir. Incredible numbers on Palantir, but the valuation's a little too high for me to buy them, and I'd love to buy them. No. So here's SFM, or no, CRM. This is Salesforce. This is a software company, and unfortunately, software has been getting whacked recently. Like ServiceNow, Adobe has done terrible, and here's Salesforce. They've kind of been struggling. So let's see how they're doing. I think investors weren't happy with the slowing growth, and I'll show you that in a second, but I love how diversified that they are. They have the services revenue, sales, platform. They own Slack, great asset to own. Great CRM. They have the #1 market share. Amazon uses them for their employees. So check this out. If we go to the net income year over year, the net income is only up 0.5% year over year. So net income is only up 0.5. That means the margins did fall a little bit because the revenue is up 7%. And also the free cash flow. The free cash flow is only up 3%. Still an incredible number. I don't believe it. Almost 6.3 billion of free cash flow just this quarter. Then they had the stock-based comp. So that's why the gap net income is only 1.5 billion because of the stock-based comp. But still, I think investors want a little bit more growth. I think that's why they're struggling on top of just the services industry not doing too great right now. I think that one might be worth looking into, though. I think they're going to be a winner in the long run. They also do dividends and share buybacks. DW said, what app is this? Yeah, hey, sorry. This is, again, if you want to get this brokerage, this software that I'm on, it's in the link tree in my bio. First link there, DW. It's an affiliate link too. So, hey, if you deposit $100, we'll both get some free stocks. I keep my cash in here too. My lowest fee, because I have all these other brokerages too. Like I got Robinhood, but they lack a lot of stuff. They lack features, usefulness. So that's why I like this one the most and lowest fee. With Robinhood, you have to pay $5 a month to get a 4% APY. You get a 4% APY here. No. Anyway. What's the difference between Moomoo and Webull? Yeah, it's not much. Webull actually doesn't have as many useful features. I have this other brokerage as well, but I like Moomoo more. I actually have a video. If you want to see the differences of all the brokerages, I actually have a video if you go to my YouTube channel on where I compare all these. Robinhood's the most simple. Do Navitas. Hey, that's NVTS. That's Nvidia Semiconductor. So basically, this company had a huge partnership with Nvidia, and it saved the company. I mean, they were a $2 stock. I mean, the stock was at all-time lows before that huge Nvidia deal. So Nvidia literally saved this company. It was game-changing for the company because if we go right here to the revenue, I mean, is not great. It's only 15 mil, down 30%. So that partnership with Nvidia saved the company. And on top of that, they're losing a boatload of money, 50 mil. So basically, Nvidia saved the company. I don't know if I'd buy them though, but ah, because after that 7% rally today, but yeah. Okay, let's see here. What up? Well, Dave said OMG. What's OMG about? Eli Lilly, yeah. Eli Lilly, man. I feel bad if you own this one before today because they tanked down 15% today. That's the largest drop I've seen like ever on this stock. And here's why I might actually be looking in to buy this one. Let's see actually what they did. So huge beat on revenue, huge beat on EPS and EBIT. So they triple beat. So I wonder what exactly led most of that huge decline. But here's what I love about them: their ability to just make a prescription and then it just get a bunch of sales. Like look at this Mount Jaro. They created it in 2022. The first quarter it had 16 million of revenue, then 180, and now literally just in the most recent quarter, 3.8 billion, up 112%. So incredible growth on just this. That's the biggest part of the revenue. That's just 30% of the business. And then they have Zepbound. This is their weight loss prescription. Competes with Ozempic and Wegovy. Incredible growth. They made it in 2023. Now it's 2.3 billion in revenue. So it's super growthy company selling a bunch of prescriptions. So yeah, wow. Net income was 5.6 bill. Was that real? It was real, man. So again, incredible growth for a company that already has huge revenue numbers. It went from 11 to 15 bill. Incredible. So I'll be looking into that one. I don't know. Yo, Miller said he subbed to my YouTube. Yo, Millers, I'm going to give you a follow on TikTok for doing that. Thank you so much. Yo, guys, I'm trying to build up my YouTube following. So, yeah, if y'all want to support me, go watch the stream from YouTube. Go subscribe to my YouTube channel. I stream on there as well. If you ever are on my stream and you see it randomly get taken down, TikTok randomly takes down my streams all the time on accident. Well, anyway, so let's keep going here. That's the best way to support me. I sell nothing, by the way. I have no course, no book, Discord, WhatsApp, Telegram. Watch out for people impersonating me. I sell nothing. Only thing I have is a YouTube channel. So that's the best way to support me if you're on the YouTube stream or on the TikTok stream. So anyway, here's Tempus AI right here, TEM. This was a company actually bought by Nancy Pelosi and her husband. And they're up 4% on the day. I'm surprised they're not actually up more with how growthy they've been. Like if you go to this business, 75% of the revenue, the genomics, this business was up 89%. I mean, that's crazy. That's a new record. And also the data and services business up 43. I mean, these are incredible year-over-year growth rates. So super growthy company, and that's really what you're buying the stock for, just the growth. Also, the deleverage of the balance sheet is incredible. I mean, look at this. I mean, just logically, they used to have a lot of liabilities. The liabilities were 4 times more than the assets. Now they actually finally have more assets than they have liabilities. They've really improved the fundamentals, and that takes a lot of risk off the table. And they're super growthy. Revenue was up 75%. That was nuts. It dipped due to weight loss. Pill research results were off expectations. Oh, hey, that's interesting. Thanks for that, Dow. Or DeWobos. What's up? Thanks, man. So someone said Hims stock. Hims. Yeah, hey, so check this out. This company right here sells a bunch of prescriptions as well, but they actually just ended their partnership with Ozempic. This company used to sell a weight loss prescription. Now they no longer sell it on their website after the thing is no longer in shortage by the FDA. So that was a huge growth driver for the company, and now that's gone. So they basically did the stock fell basically on lower growth in the future off that, but they still sell a bunch of other prescriptions that can hopefully make up for it. Shorm's short interest. Let me see the short interest. Here's how you check that, by the way. So we go to Hims right here. Yo, sorry, my Wi-Fi is kind of buggy right now. Oh, hey, we can look at SPGI too. Oh, come on, Hims. Can we load here? Uh-oh. I might have to reset the screencast here. Hey, by the way, if y'all want to hit the follow button, we go live every day, twice a day sometimes. We just look at stocks. So anyway, we go on Hims. We scroll down here. We find the short interest. Should be right here. So short interest, no way. 30% of all the shares of Hims are being shorted right now. That's very high for a stock. So yeah, there's kind of some cool stats we can get here too. But anyway, here's kind of the really cool part about this stock is how growthy they've been. The sales are up 72% year over year. So that's really good growth. And on that, they made 42 million of net income. So that's really good. Also, something just happened to the balance sheet. I think they issued like $1 billion of debt, but got $1 billion of cash from it. So now their cash went from 270 mil to 1.12 billion of cash. So tons of cash on hand. So making net income every quarter. The free cash flow did just go negative, so we'll be aware of that. But anyway, yeah, that's Hims. They have a lot of growth. All right, let's see. Hey, thanks so much, John. I really appreciate that, man. Yeah, if you go to my YouTube channel, I also have a lot of videos for beginners there. Someone said any tips for beginners? Most people would be like, "Hey, go buy my course and you can learn." But hey, I don't have no course, book, nothing. I would just do some research, read articles, watch some YouTube videos. While Warren Buffett's responsible guy to learn from, Lucid Constellation. Yeah, I'll pull up Lucid. I mean, I actually don't like Lucid. We could look at MicroStrategy as well. I mean, MicroStrategy, that's like the Bitcoin proxy. So Lucid stock is not done too good. Are you planning any earnings today? I don't think so. I don't have any companies that report earnings today. The past 2 days were huge because that's when a lot of my portfolio reported. Geez, man, is this really not going to work on me? I do apologize, man. This Wi-Fi has been giving me some problems. This Apple TV, man. Come on, Apple TV, your stock's up crazy today. Oh, well, there goes the screencast. Well, that's not good. Okay. Well, hold on here. 1 second here. We are almost back. Okay, there we go. There we go. Okay, Lucid. Sorry about that, by the way. Um, So Lucid basically gapped up on this huge deal with Uber. Uber bought $1.25 billion worth of cars from Lucid. But here's what you got to be careful with about this company. I mean, there's a real actual bankruptcy risk here. They're a $6.6 billion company. So kind of remember that the whole company is worth $6.6 billion. If you go to the net income down here, they're burning a lot of money. 550 million just this quarter. That's like 5% of the entire market cap they lost. I mean, a billion this quarter, 300 mil, 400 mil. So these losses are kind of scaring me. They're leveraging up their balance sheet. So what that means is, look, the liabilities used to be 57% of the assets. Now it's 72%. So liabilities are going up. They're issuing shares while the stock is at all-time lows. So it's a tough buy. I think that one isn't really one you want to buy and hold for the long run. It could be a fun little swing trade, but I don't know about buy and hold forever. Ooh, so AMD right here. So advanced micro devices. I do own. Actually, here I'll show you my position in them. They did. Oh wait, they're up like crazy. I don't know what happened, but they fell yesterday on earnings, and now they're back up 5.57%. So anyway, yeah, there's kind of my cost basis. My 11 shares are at 125. So I didn't even time the. We're up like 40%. I didn't even time the bottom or even close to it, and we're still up a good amount. They've really blown away even my expectations. So let me show you their earnings right here. Obviously, we know first off they have this PC GPU market share of 17%. So they sell GPUs. Oh, hey, look, the data center business, how'd that do? Data center business is up 14% year over year. But now, how is their client and gaming business? Up 69% year over year. So that's actually some pretty good growth. Let's see the revenue. Oops. Revenue was up 31. Net income was up 200%. So dang, they made nearly a billion in net income. What about free cash flow? 1.7 billion of free cash flow this quarter. That's a record free cash flow number. Also, they have a pretty monstrous balance sheet. They have no net debt, so pretty good balance sheet on AMD. So that's maybe the financials were good there. I think they had a small miss on the data center business, but still. I do own them, so I might be biased. DW said Bank of America. Oh, and AUR. Yeah, we'll look at those. So Bank of America, that's actually a Warren Buffett stock. So we go to Warren Buffett's portfolio right here. As you know, these super investors have to reveal all their holdings by SEC law. And one of his main holdings is BAC, Bank of America. So yeah, this obviously is a bank. That's where consumer banking's 40%. Global markets, global wealth management, global banking. If you look at the dividend, you get a really nice yield here. A 2.4% dividend yield, 31% payout ratio. The PE, what's the PE ratio? It's a 13.2. That's in line with industry average, almost exactly. Wow. So anyway, there you go. Bank of America, they're making, wow, 7 billion of net income every quarter. I mean, that's pretty ridiculous. So they're really profitable. I can see why. Hey, Bank of America is owned by Buffett too. Oh, I forgot to look at this one. Yo, Joshua, if you're still in here, that's my bad. I forgot to get to this one. But here's S&P Global. This is the credit rating company. So if you've heard of the S&P 500, this is the parent company. They use the S&P 500 name. They have to send S&P Global a royalty for using that. And they are a credit rating agency. Let's see. So market intelligence. Yeah, there's the rating businesses. They share an oligopoly with Moody's and Fitch. Then they're in commodity insights. Look at this right here. This stuff we've been looking at, Moomoo uses actually S&P Global's data. Look at this data from S&P Global. And this is not just on this stock. It would be on every stock. It would say data from S&P Global. So that's what their kind of insights. Market intelligence. How's that doing? Yeah, hey, up still growing. So that's great news. But the best part is the net income. I mean, they're making over $1 billion in net income every quarter. So yeah, pretty cool. They also have a nice dividend. All right, let's see here. AUR, please. Yeah, let's look at Aurora Aviation. Or Innovation. I think this is still a revenue-less company, but I think a huge shareholder is like, I think it might be Honda Motor or something like that. You know what? We'll go check. What do you think of Rocket Lab earnings today? Oh, that'll be interesting to see. So if we go to shareholders right here, oh, it's Uber. Oopsie. Uber owns nearly 20% of the company. So 20% of all the shares are just owned by Uber. So first off, they have a really good balance sheet. Let's see how much cash they got. So they have no debt and $1.3 billion of cash on hand. So they can afford to have, dang, they're losing a lot of money. They're losing 200 mil a quarter. I guess they can kind of afford that right now. But here's the one thing I would be a little concerned with is that the fact that they don't sell anything. The revenue still it was 1 million in the most recent quarter. So what's the market cap on this one? Yeah, an $11 billion company, again, with 1 point something billion of cash. I'm being I wouldn't probably buy this one right now, but it might be justified, that valuation. I would just be careful but it's really cool to see Uber on 20% of it. It's kind of backed by Uber, so that's really cool actually. Um, so let's see, ZD stock. What app is this? Yeah, hey, Braden, if you want to get this little software, this brokerage I'm on, it's in the link tree in my bio, the very first link there, and it's actually an affiliate link too. So if you go and deposit $100, we'll actually both get some free stocks. I keep my cash in here too. It's my favorite brokerage, lowest fee. I have these other ones, but this one's my favorite for analysis too. So let's see, do Palantir and ZD. Let me look at ZD, then we'll look at Palantir. So Ziff Davis. Not huge, a $1.5 billion company. The stock is down bad since 2019. Oh, but look at that. They're up 20% on the day. I didn't even notice that because of how still it's only really recovered the past couple months here of losses. But let's see. What do they sell? Health and wellness, technology and shopping, cybersecurity. And how's that doing? Well, that's not good. It's down 10% year over year. Well, let's just go look at the total revenue, see how they're doing. So revenue and net income, if it'll load for me. Uh-oh. Revenue. Okay, it's gonna load here in a minute. So revenue's up 4.5. So it did actually grow year over year. So that's the good news. Revenue's up 4.5, and they did make net income on that. They did, yeah, 25 million net income. So I don't know, nothing's really blowing me away there. I mean, revenue's up, single digit, mid-single digit. I mean, they are diversified. That is some good news. I like how diversified that they are, but some of the business are struggling. All right, let's see here. Palantir's, everyone know that one? Yeah, everyone knows and loves Palantir, and I can see why investors love this one. I mean, they're everything you'd want in a stock. I mean, they're AI, they're government, they're debt-free, they're data. I mean, everything investors love. But one thing I don't love about this company is this valuation. 125 price to sales, price to revenue, not net income, but sales. But anyway, here's why they might deserve it. Incredible growth. I mean, if we go to where half their revenue comes from the government revenue grew 50%. That's the highest growth rate I've really seen ever. So to 552 million, huge government revenue growth and commercial revenue growth, up 50% also, insane growth. A lot of police stations use Palantir in their software. And 66% of the revenue comes from the US. All right, so cool. They also just had their first ever $1 billion revenue quarter. So $1 billion of revenue. And on that, they made 330 million in net income. So really nice net margin there. And also a really nice balance sheet. They have no debt at all, completely debt free, and 6 billion of cash, up from 4 billion of cash. So pretty nice growth on Palantir. Thinking of investing crypto. Um, requires long term. Hey, what? Oh, that. I'm sorry to hear that, Salim. If anyone knows the best way to start, um, you know, I, a lot of people try and get rich quick. The best thing I recommend is really just buy the S&P 500 or buy great quality companies that you know and love, like Google, Meta, Amazon, even McDonald's. McDonald's is a cool one. They pay you nice little dividends. Let me turn down my volume. I don't know why my volume is up, but yeah. Anyway, yeah, we're down on the day. With with stocks, you're supposed to get on average like 8% a year in compound. So the idea isn't get rich quick. It's like you turn $100 into 108, and then the 108 goes to 120, then 120 to 150. It kind of spirals and compounds up, snowballs. So, time in the market beats time in the market. You have any medical device stocks? Yeah, there's ISRG is my favorite one actually. Intuitive Surgical. So actually they're starting to come down a little bit. So maybe you could find a good entry on this stock if you put it on your watch list right here. But yeah, instruments and accessories, systems and devices. So yeah, basically the fundamentals are so good here. If you're looking for a stock to buy and hold forever, this one looks safe in my opinion. I mean, look at this. This is the net income, the after-tax net income. I mean, they're making 600-700 million of net income a quarter, and they have an absolute monster of a balance sheet, no debt. Let's see how much cash they have. 5.3 billion of cash with no debt. So that's pretty cool. All right. What do you think about the MAGS ETF? Yeah. So hey, if you want the Mag 7, this is just the MAGS ETF. So it literally just owns Google, Meta, Microsoft, Nvidia, Tesla, and the other one. I Apple. I think that's all of them. Or let's see. Can we just go to the funds details right here? Yeah. So Nvidia, Microsoft, Google, Meta, Tesla, Amazon. So yeah. Anyway, yeah, it's an interesting ETF. What's the app you're using? Yeah, hey Matthew, I'm on a broker right here, brokerage software. If you want to get it, it's in the link tree in my bio, the very first link there. It's my favorite one. To buy stocks and like do analysis on. Did you? No, it's ISRG. Ticker symbol is ISRG, the one I was talking about. Hey, what up, Ryan? He said PM and Coca-Cola. Hey, yeah, Coca-Cola stock. You know what? Warren Buffett approves that message right there. You know what? Let's go to Warren Buffett's portfolio. Check this out. 10% of his portfolio is in Coca-Cola. And oh, hey, look, this app is telling me what is this right here? There is a bearish flag. Well, anyway, that's technical analysis. This is a nice dividend play. You get a near 3% dividend with this company. So first off, you're getting 3% of your money back every year just in a dividend. And also, the PE is a 25, pretty fair PE. Here's the net income they're making every quarter. I mean, they're making 2 to 3 billion of net income every single quarter. So yeah, that's what's pretty cool about them. And they also do buybacks as well, a little bit of buybacks. So all right, that one's owned by Warren Buffett as well. Yo, what up, Joe? Joe Cosmos, what's up, man? Symbiotic, please. Yeah, we could look at PLMR. That's that like earthquake insurance company. So here's Symbiotic. They're down 13% on the day. Let's see, what does this article say? Symbiotic warns of revenue hit from new storage structures. So hey, maybe they're high capex, investing in infrastructure. That's not always the end of the world. So anyway, they've had a pretty monster run before earnings. So if they just stay right here, like right at this $55 level, I mean, that's good news, in my opinion. So this is actually, if you're wondering what this is a warehouse robotics stock. It's my second favorite robotics company. My favorite would be Amazon. Obviously, it's not a pure play, but this is a more pure play robotics company, and they do warehouse robots, and their main customer is actually Walmart. And Walmart, after this partnership, decided to buy 14% of the company. So first off, it's kind of backed by Walmart. Walmart owns 14% of the shares. The net income is still struggling. It's still not net income positive yet, but revenue growth is pretty good. After growing 50% year over year, it still grew another 25%. So Symbiotic, that's one of my favorite robotics companies. I'd stay away from the RR, the rich tech robotics. No real fundamentals there, but this one has real fundamentals. Yeah, hey, try not to spam there. Yeah, we can look at UNH there, PLMR. So yeah, hold on. Sorry, Danny, gotta mute you, brother. Can't. I need a mod. Anyway, here's Palantir. Or wait, no, I just looked at the wrong stock right here. I didn't want to look at Palantir. It was PLMR. Wait, PLMR. Okay, so Polymer Holdings. So this is that earthquake insurance company. So if you're looking for an insurance stock, this one's a little interesting. They did fall yesterday and they've recovered. So let me actually go see what the earnings were. So let's see here. Property and casualty insurance. Yep, that's the earthquake. And look at this. This is really good growth. Revenue's up 55. And on that, they made 50 mil of net income. Net income's up 80%. Net margins is at 22%. So hey, if you're looking for a smaller insurance company, this is one that has incredible growth metrics. You know, revenue's up 55, net income's up 80. They're making 40, 50 million in net income every quarter. I mean, I don't know who fell for the earthquake insurance scam, but hey, there's it's like that Family Guy episode where Peter got sold for volcano insurance. Actually, earthquake insurance is real in some parts like California and other places. But anyway, let's keep going here. Let's look at UNH. Yeah, we can look at UNH. Oh, what up, Ryan? And we can look at MOD. Yeah, we can look at those too. Wait, I forgot what stock where was it? It went away in the chat. I forgot it. Oh yeah, wait, UNH. Okay, United Health. We'll look at this one. This one is just had a PE collapse because of the government's regulation. You know, basically, if they get accused of fraud, they're going to get kicked out of Medicare and Medicaid for 5 years, and that risk is really putting a toll on their PE. That's why the PE is a 10. That's the lowest net income multiple it's ever traded at. You know, we're also a customer. We use the OptumRx business, so you know, they're the largest provider. I think they were trying to like buy some company. I don't know. They said they had to sell some assets off. Wait, what is this right here? U.S. Senate launches investigation into UNH on alleged nursing home bonus payment practices. Anyway, there's going to be a lot of stuff like that, you know. So anyway, it's going to be probably a tough industry, tough stock to own for another 2-3 years. So it's really a long-term play if you buy them. I think it's worth nibbling, but I would not put a meaningful amount inside United Health. I just don't think they're really going to do too well over the next year or 2 years. But I could be wrong. I want to be wrong. But I wouldn't put a huge meaningful position, maybe a small little quarter-size position. What app is this? Yeah, hey, Jaden, again, this is a brokerage that I'm on. If you want to get this app, I'm on software. It's in the link tree in my bio, first link there. It's an affiliate link too. So anyway, here's MOD. Wow, this one has had some really good returns, especially since 2019. I mean, this was a $6 stock, and now it's $135. Wow, hey, congrats if you own this one, Joshua. Yeah, let's see what they do. Climate solutions. So hey, kind of like an HVAC industry, and you know that's kind of an industry a lot of people, you know, whether you're in a super hot environment or super cold environment, you know, you need an HVAC. And look, half the revenue comes from the U.S., and I like how diversified that they are. Then they're in all these other countries like Canada, Italy is 10%, Hungary is 7%. And let's see this net income. And look at that. They're profitable every quarter, making 50 mil of net income a quarter, 200 mil a year. Do they pay dividends? No dividends, and that's all right because you've gotten a lot in stock price appreciation, so no one's upset about not having a dividend. Maybe they could one day. Let's see. What up? Does YouTube have a stock? It sure does. Hey, yeah. YouTube is actually owned by Google. It was actually one of the best acquisitions in history. Google, y'all ready for this? Google bought YouTube for $1.2 billion. That includes all the stock and everything, or in cash and the future stuff, but $1.2 billion after the employee retention. And now YouTube itself is worth $330 billion. It's in the top 10 acquisitions in all time in history. So they bought it for 1.2 bill. It's worth roughly, 330 billion of Google's market cap. But anyway, check this out right here. Google's so innovative, so growthy. I mean, they literally make 20 to 30 billion of net income every quarter. What is Google doing with 30 billion of net income a quarter? Well, this is why they're so shareholder friendly. We go to the stock buybacks. Google's literally spending nearly 15 billion every quarter just buying back their own stock. Isn't that ridiculous? So Google does insane share buybacks. They have a fortress of a balance sheet, man. I don't believe it. And they're like an ETF in one. They literally own Android, like the Google Play Store. Every time you buy something in there, they take a fee. They own the Google Cloud business. Like, look at just the Google Cloud business. It's up 31% year over year. They own Waymo. They have their own quantum chips. I mean, so innovative. So anyway. Secular says, what app using? Yeah, hey, if you want to get this software I'm on, it's in the link tree in my bio. It's actually a brokerage. It's in the link tree in my bio, first link there. So anyway, Google's a perfect buy and hold forever stock. Full disclosure, I do own them. I talk so well about them, I might be biased because I do own them, but I own them for those reasons because the fundamentals are so good there. So that's why I have 19 shares of Google. I love them. How do you see the share buybacks? Yeah, you just go to the cash flow statement. And another way, here's another way you can see the share buybacks, a little bit more of a simpler way. And I think you guys will find this pretty cool. This is a bit of an easier way to kind of see the share buybacks without having to go to the cash flow statement. Also, whenever a company buys back its own shares, it makes the stock price literally go up. There's less shares that exist. It gives you more ownership in the company, makes the PE ratio go down. But here's how you can, another just quick way to tell if they're doing share buybacks. So the net income year over year is up 19. So the net income's up 19% year over year, but your return as a shareholder through earnings per share, EPS, which is net income per share, should be up more. And yeah, look at that. It's up 22%. So that's kind of a quick way to tell. Net income's up 19, but net income per share is up 22 because the share part of the ratio went down. Sorry, my phone's kind of lagging here, but it's kind of cool to see that. Sorry, people keep asking me. I should link this or unpin it. Yeah, hey Justin, if you want to get this little software that I'm on, this is actually a brokerage. It's in the link tree in my bio, the very first link there. It's where I like to keep my idle cash and I buy stocks in here. Lowest fee, no monthly payments. Unlike Robinhood, you got to pay. With Robinhood right here, you have to pay $5 a month to get yields and stuff. Like no monthly fee, and you can keep your cash earns interest in here anyway. Hey Millers, let's see. All right, I got you. All right. Anyway, let's keep going here. Thoughts on Run? Are you in? All right, let's see here. There we go. There you go. Millers. Okay, so someone said, oh, what stock was it? I just clicked off of it. Sorry, let's keep, Sunrun here. So this is a company I'd be very careful with, and I feel bad if you own this one. So here's kind of how I analyze stuff. So look, this whole company, the whole market cap is 2.7 billion. So you're buying it on a company that's wholly worth 2.7 billion. Well, if you go to the net income down here, they literally lost $300 million just this quarter, which is a huge chunk of their market cap. And it's not like just this one quarter. They lost another 300 million the last 3 months. And then I don't know how this is possible, but then they lost 3.4 billion, then 400 mil. So this company is literally burning money hand over every quarter. The farthest we scroll back, they're losing hundreds of millions in net income every quarter. So I honestly think there's some real bankruptcy risk, and I think that's why the stock is near an all-time lows. I mean, they are up 30% on the day, but I mean, at this point, it's all just momentum. I'd be super careful with this stock right here, leveraging up their balance sheet because these net income losses. I mean, look, the liabilities used to be 67% of the assets. Now it's 79%. So it's tough there at Sunrun. It could be a fun little swing trade, momentum trade, but not really one I trust to just buy and hold forever. Someone said Roblox. We'll look at Roblox again. So, and Elf Beauty. I do want to go to Elf Beauty as well. So if we go to Kathy Wood's portfolio, Kathy Wood loves Roblox. It's 6.3% of her portfolio. But the reason why I think Roblox has really had this monstrous performance is because they're really beating on every metric. Like if you go to, this is a really cool metric right here. This is their daily active users. So not like monthly active users, but daily active users. Apparently, I don't know how this is possible, but Roblox has 111 million daily active users, up from 79 mil. So they have 111 million daily active users, and the free cash flow has started to take off. So if you go to, oh my gosh, sorry, my thing's bugging right now because anyway, the free cash flow, they're making a couple $100 million of free cash flow every quarter. Really good free cash flow numbers, but the bad news is actually the net income. They're actually losing a lot of net income because of stock-based comp. They're paying their employees over $300 million worth of stock every quarter, and stock-based comp is included in GAAP net income, so that's what makes the net income go negative. And they're a little bit leveraged, but the free cash flow growth in the daily active users number has really been why Roblox has been rallying up so much. Beat analyst expectations. But I would be super careful with that one just because of those net income losses. I think they're still fine though. Here we go. What up, Eris? You said C-Fly, FLY stock. I haven't heard of this one. Firefly Aerospace. Let's check it out here. And then, hey, Ryan, we got to look at SEZL. If you like IPOs, so this one did just IPO. Look at that. So I think they IPO'd today or something. They were at 45. Now they're at 65. What's the market cap? So a $9 billion company. Yeah, a lot of the IPOs have just been on fire. It's tough buying IPOs though. We don't get much history here because they just IPO'd, but the one thing we do see is this incredible growth of 8 million to 55 million. So anyway, There's Fly Aerospace, but here's a company I really love, and I honestly get not financial advice here. I would put this one on your watch list. So I wouldn't. I don't know if I'd buy this one. They report earnings literally today in less than an hour. In less than an hour, this reports earnings. They're either going to go up or down a bunch. So if you buy them now, you're betting into earnings, but I'd wait till after earnings. I hope they go up. Here's why I think they're going to do good. They're so growthy. This is like the definition of a great company that I would trust to buy and hold forever, buy and hold for the long run for now. I mean, look at this. The revenue's up 123% year over year. Incredible growth. It's more than doubled. And look, it's 104 mil of revenue. Out of the 104 mil of revenue, 36 million of this was profits. So the margins here are incredible, 30 to 50% net margin sometimes. And the margin growth story here is incredible. So at this growth rate in the margins, what's it going to be this time next year? Also, they're deleveraging the balance sheet. Again, assets were 84%, or the liabilities were 84% of the assets. Now it's only 57% while growing. So everything's headed in the right direction. They're incredible margins, incredible growth. So that's kind of why the stock has done so good, because the fundamentals are so good. The financials usually explain why the stock's either doing good or bad. Oh yeah, let's go to Elf, and then we got to look at HubSpot. Yeah, hey Jules, what's up? We got to look at HubSpot as well. Sorry for not looking at that one earlier. I forgot about it. Happy to. Hey, thanks so much, Carlos. I appreciate that. Yeah, hey. I'm just on here give my opinion. By the way, I sell nothing. I have no course, book, Discord, WhatsApp. I got none of that. Just on here give my opinion. Best way to support me is hit the like button and subscribe to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio, my YouTube channel. But here's Elf Beauty. This is a beauty and cosmetics company that's really been taking market share away from like an Estée Lauder. And this is kind of why people love the company. I mean, this is fiscal year, but still same time frame. Look at this annual revenue. I mean, 400 mil, 600 mil, a bill, 1.3 bill. So the growth has really been high, but they're kind of struggling with profits. That's a little bit why the stock has been flat for a while. The profits, I mean, look at this. It used to be higher, 50 mil, now it's only 30 mil. So they're struggling with the margins a little bit. And the growth did start to slow, only 9%, 3% growth. But I do like this industry. They have a good balance sheet as well. So, but still, they're making net income every quarter. That's the good news. So we want to just see these kind of net margins go back up. I know, the whole space right now, I think they're just being caught up in the whole space. Like if you go to Estée Lauder, which is EL instead of ELF, they just sell the same thing. Look at their stock. And look, Estée Lauder, again, they just sell skincare, makeup, fragrance, the same stuff as an Elf Beauty. So it's the industry, but that one might be interesting. What does Sezzle do? Sezzle is a fintech. What's the app? Yeah, hey, CED, I'm on a brokerage right here if you want to get this software I'm on. Link tree in bio, first link there. It's also an affiliate link too, so we'll both get some free stocks if you sign up with the $100. Anyway, let's keep going here. Hey, thanks, Carlos. I appreciate that. Hey, then thanks, Mo. What's up, Mo? From Florida. What's up, dude? He said TOI stock. What is this one? TOI, the Oncology Institute. So let's see here. So they have a $400 million market cap, and they've been doing pretty good over the past couple months here. So let's go analyze their financials to see if I like them. So patient services, and I can't talk about this industry, but okay, so they're in that industry. So the revenue is up 11% year over year, and they're still losing a bit of money. They're losing like 20 million a quarter. So we do want to see them kind of narrow these losses, because that is hurting their balance sheet. They used to have more assets and liabilities. Now it's really catching up, the liabilities. So we really want to see these net income losses start to narrow, especially because they're losing 20 mil a quarter. That's pretty significant when the whole market cap's 380 million. So that's the one thing I would be careful about. But the stock's done really well. Look at that. I went from 12 cents to 450 or 4. So they've had incredible performance, but that's the one thing I would watch is that net income there. All right, let's see. SEZL potential upside to 180. Yeah, we'll see what they're. Hey, what up, Shark? Ooh, Snapchat. Wait, we got to look at I keep forgetting to look at this one stock. HubSpot, HUBS. HubSpot. You keep reminding me to look at these stocks. I want to look at Rocket Lab 2, Snapchat. So here's HubSpot right here. This is like a Salesforce competitor. They're down 9% on the day. So the software has been a tough business. This stock is sending Salesforce down today. Salesforce stock looks almost identical to this exact chart right here on the 1 year. So let's see how they did. So they beat on revenue, they beat on net income, and they beat on EBIT. So it must have been maybe some bad guidance or something. Yeah, so revenue's up 19%. They barely lost any net income. They deleveraged the balance sheet from 52 to 42. Huh, I wonder what happened there. I know the services industry, like the thesis is being kind of hurt from AI, but that one might, Salesforce might be a better buy, I think. I've looked into them before. I've always thought Salesforce was a better company to buy than them, and the stocks looks pretty same. And that one has a dividend yield as well. Okay, so here's Snapchat right here. Check this out. Yeah, did y'all know Snapchat was publicly traded? Here's their stock right here. They've not done too good. They're lower than they IPO'd in 2017. CEO made a billions and then cashed out and dipped. But anyway, the business is way different now. Look at this. Here's kind of a cool metric. On Snapchat, this is their daily active users. Pretty cool metric. They actually have 469 million daily active users. And if we go to this right here, I think this is why the stock is still struggling. I mean, we were hoping they'd get closer to net income positivity like they did this quarter, but no, lost 260 million in net income this quarter. So they're losing a lot of money. Despite good free cash flow numbers, the stock-based comp and stuff. So basically it's tough because of these net income losses. We were hoping to see those narrow. Hey, Tencent is the largest shareholder. That's kind of interesting. All right, let's see. TTI stock. Is that Train Technologies? Oh, Tetra Tech. Um, let's see. So Tetra Technology. Okay, another really small one, a $500 million company. So very small market cap. Stock's the same price it was back in 2018. Let's see. So completion fluids. Water and flowback services. So this business is down double digits, but the completion fluids is up 9%. So mixed bag here. Let's see. Are they profitable? So they are. They are a bit profitable. So that's the good news. What about balance sheet? Pretty good balance sheet. Decent. Getting better. Cash from operations was 50 mil. Not bad. I'm nothing's really blowing me away here. Just because they're a small cap, the revenues, after you include both businesses, revenue's only up 1% year over year. They did make 11 mil. So here's kind of the good news is like what's the PE ratio? Should be really cheap, right? Yeah, so the PE is a 4.4. I didn't realize it was that cheap actually. So yeah, they're trading at literally commodity 4 times net income. So, hey, maybe there's something there. Roblox gives shares to employees. Is that why net income is negative? Yep, because GAAP net income includes stock-based comp, and a lot of these companies usually pay their employees with a couple $100 million of stock a quarter. So, Intel stock. Okay, I feel bad if you own this one. So, Intel. All right, so wait, I forgot what I was talking about there, Joshua. Okay, so here's Intel right here. This one has just been a huge underperformer. If we go back to 1998, it's the same price that it was. So in 1998 to now, the stock is the exact same price. That's unfortunate. They're just losing a boatload of money. So despite this good market share that did decline, PC GPU market share went from 66 to 63% in the most recent quarter. So market share did decline. Still a really big market share, but here's the main reason the stock's struggling. If you look at this free cash flow, I mean, they're losing a couple billion of free cash flow every quarter, and the net income is also really bad as well. So it's kind of like a rebound play, but it's tough. I can see why this one's done so bad. I mean, they lost another 3 billion this quarter. I don't know how, but 16 billion. I mean, and they haven't made any net income in a long time. So they used to print money. You know what? Look, here's what the company used to be. This is 2021. They used to make 8 billion in net income a quarter. Then they lost their partnership with Apple, and then the stock has just been dead money ever since. So it's tough. Let's hope the government can give them some contracts and stuff. But anyway, yo, what up, Jaquez? How's it going? Oh, what up, Trappy said Dell. And Azri said, what app is this? Yeah, hey, by the way, Azzy, if you want to get this app I'm on, it's actually a brokerage. The software I'm on is in the link tree in my bio. First link there. It's an affiliate link too. So we'll both get some free stocks if you sign up and deposit $100. But to use all the tools, it's free. You don't have to deposit anything. But let's see here. Rocket Lab. Yeah, we can look at Rocket Lab. Let's do it. RKLB. And by the way, if y'all wanted the follow button, we're going to be live later today. I think it is available in the UK. Yeah, Azzy, I believe it is available in the UK. It might not be, but I'm pretty sure it is. I know it's available in the US and Canada. All right, so anyway, I just realized I disconnected my phone from my Apple Play. That's not good. Sorry. Okay. Here's Rocket Lab. This stock is my favorite space systems company. I mean, I wouldn't buy Lunar or ASTS. I'd buy Rocket Lab. That's my favorite one, in my opinion. Super growthy. Revenues up 45% on their space systems business. They also have a huge backlog, 1.5 billion backlog of orders, huge backlog, which is great. And they just acquired a company for a couple $100 million, so that'll help their sales grow even more inorganically, but still growth. Would be careful for these net income losses, but they're just super growthy. I like them for those reasons. Sorry if I'm going really fast here. I'm trying to get to everyone's stock here. So kind of fast paced. GLW, what's this one? This is what up, Carver? He said Corning. So let's go check out this one. They have apparently had some great earnings and gapped up right here. Let's go see what their earnings were, what they reported. So, yeah, huge beat on revenue. Look at that. So analysts were expecting 3.8 bill. Huge beat on net income as well. 43 cents was the expectation. They made 54. So triple beat on everything. I could see why they're up so much. Here's what the business does. They're in optical communications, display, specialty materials, automotive. So first off, I love how diversified that they are. Life sciences. So let's check out the net income. Yeah, 500 mil of net income this quarter, and that was real. Wow. So that wasn't some one-time adjustment. They really made that. So really good growth, 20% year-over-year growth. I can see why that one gapped up on earnings. Those were good. So let's look at Dell right here. Sorry, I didn't get to this one. Here's Dell Technologies. This one's kind of a value play right now. So ever since their shout out from Nvidia, stock's done really good. So let's see. I know they have a nice dividend yield as well. So even if you buy the stock right here, right now, you get a 1.4% dividend on this company. So hey, pretty good dividend yield. Let's see. The PE is a 20. That's a pretty fair PE ratio, a 20 PE. I think it's because they're kind of just slow growing. Like, look, if we look at the revenue, it kind of just goes single digits. It's up 5% year over year. Nothing, fantastic, but still growing. Net income, they're making nearly $1 billion in net income a quarter, which is good. More liabilities and assets. Michael Dell owns 40% of the shares. Hey. Anyway, so that one's interesting. There's some good and bad things about them. Thoughts on UNH medium to long term? Yeah, UNH is a long term outplay. I mean, the PE has collapsed. I think it might be worth a small position. Spammy. What happens is, yeah, hey, Spammy, yay. This is actually a brokerage link tree in my bio. Very first link there if you want to get this app I'm on. We'll look at a few more here, guys. This is one of the longer streams I've done. My head is starting to hurt. But if y'all want to hit the follow button, I'm going to do another live stream tonight. I stream every single day around this time every day. So if y'all want to hit the follow button, we'll be streaming tomorrow as well. Dell was behind the 8-ball with liquid cooling versus air cooling. Oh, with the server racks. Yeah, I heard that. Dell was competing with Super Microcomputer. Yeah, Dell is probably hurting Super Microcomputer's net margin because they just sell a commodity, like anyone could really do with Super Micro, and Dell does. GLW is one of the few companies that Apple will be using. Oh, you know what? I have like a watch list. It's called like the Apple Ecosystem watch list right here. This is very cool, actually. So check this out. Go to the Apple Ecosystem watch list right here. It basically has all the companies that'll kind of benefit. It's like Coherent, MP Materials. Corning is on this list as well. So pretty cool little watches here if you want to take a screenshot of this or something. Amphenol's on here too, Copper Play. So these are all supposedly the Apple ecosystem plays and bets here. So yeah. Anyway, let's see. Few more here. LEU. What's this one? At Centrus Energy. So yeah, this one's had a pretty good performance. Check that out. Stock's pretty close to all-time highs. Still a small one, 4.3 bill. Yeah, that is a real all-time high on this company. Geez, so $4.3 billion market cap. Let's go check out the financials. Oh, so it's because of the uranium industry. So ever since the EO's executive orders out for stimulating nuclear reactors, I mean, uranium has been on fire because uranium powers nuclear reactors. Did you know the whole point of a nuclear reactor is to heat up water, and then it's just a steam engine. So basically, they turn uranium to heat up water into steam and then collect the energy that way. So those huge nuclear silos that you see, those huge like nuclear things, it's actually just for steam to cool down. Anyway, here's the global X uranium ETF. So the whole uranium industry is kind of at all-time highs right now. Thoughts on BYD, NVO, MAGS. Yeah, MAGS. This one is just a Mag 7 ETF. So it literally just owns all the Mag 7, just those. So it's like Nvidia, Microsoft, Apple, Meta, Amazon, Microsoft. All right. And I'm missing Tesla. I'm missing one, but yeah. Wait, Novo. Wait, Johnson said NOVO. I think he means NVO. Yeah. Let's see here. NVO or Novo. Let me know which one you're talking about. You talking about Novo Nordisk or probably not. You're not talking about Novati Group. Yeah, no way. So Novo Nordisk, this is that weight loss company. They sell Ozempic and Wegovy, the two main little weight loss prescriptions there, and they're up 7.6% on the day. But basically, the PE has collapsed. This net income multiple has collapsed because their patent expires in 2-3 years from now. But literally, all their revenue pretty much is their obesity care products. So it's a weight loss play right here. If you're looking for an industry, they're not an American company. They are an EU company. But check out this net income. I mean, it's right now the business is doing incredibly, and I think it might be a little oversold. They're making literally over 4 billion of after-tax net income a quarter, 3.6% dividend yield. Pretty cool if you're looking into the weight loss play. KLAC and Affirm. Hey, what is KLAC? Well, look at Affirm. That's that buy now pay later company. Catherine, I don't want to cover BBAI. I don't have anything good to say about it. I apologize. If you got any other ones though, so here's KLA Corp, a huge one, 120 bill company. I don't know if I've heard of this one before. It's huge. Wow. And it's had pretty incredible performance. Let's see what KLA Corp is. So they're a semiconductor process controller. So the revenue's up 31% year over year. So that's good growth. That's what you want to see. The net income is also, wow. So look at this. Revenue's up 23, but profits, net income is up 43. So what does that mean? That means they're growing their margins. Wow. Net margin grew 16% to a 38% net margin. So great numbers here. They're deleveraging their balance sheet too. Oopsie. Look at that. Liabilities were 78% of assets. Now it's only 70. Good news. 0.8% yield. You get a dividend with this company. Yeah, great news. I like that one. Wendy's stock, thoughts on Symbiotic? Yeah, hey, we looked at them a few times. Oh, wait, let me look at Affirm. I have nothing good to say about Wendy's, unfortunately. This stock's at an all-time low. The only good news is that they still make net income, but all their net income gets eaten up from their dividend. Like, check this out. They're making, and it did fall. Their stock, I mean, I don't know how Wendy's, look at this. Same price that it was back in 2004. So, tough. And look at this dividend. I just it's tough. I'd way rather buy McDonald's stock. So Wendy's is maybe do options on that. Hey, Wendy's may have some good breakfast sandwiches, but that stock is not too good. I always thought McDonald's is like the king of breakfast. They had the McGriddle, um, uh, all this stuff there. What's that called? Forget the name. They have like the McMuffin, the McBagel, English muffin is what I meant to say. Anyway, McDonald's is really a real estate royalty company. Wendy's owns their stores, but guess what? McDonald's doesn't own their stores. They franchise them out. And guess what? Every time you go spend $100 at any of the franchise stores, you go spend $100 at them, $4 of that $100 goes back to this corporation, this stock right here, as a high margin royalty. So they collect, that's like most of the revenue, the royalties they collect. And then they also own the land under 80% of the store. So McDonald's a long time ago was like, yo, we can't really build a fortress empire making 10 cents off every burger. We got to own the land under the stores, collect over the market rents from each person. We got to collect royalties, high margin royalties. It's just such a genius concept. McDonald's fascinates me. So I do own that one. So I might be biased, but anyway. Anywho, let's see. Yeah, hey, wait. From Nathan's link, good sign up, no minimum. Hey, thanks, Shark and Water. I really appreciate that. You got one share of Google. That's awesome, Shark Water. Yeah, hey, if you want to get this little thing I'm on, link tree there, first bio, and in the description. Thanks so much, Shark Water. Thank you so much. So here's a firm right here. So this is that buy now, pay later stock. So they've seen a lot of growth recently, and not just the stock, but the actual fundamentals here. So check this out. If we look at the revenue, I mean, it's up 35% year over year. If we just zoom out, it just hits a new, look at these year over year growth rates. It was 300 mil a quarter. Now it's 400 mil, 500 mil. Now it's nearly 700 mil of revenue a quarter. Crazy. And on that 700 mil of revenue, they made, oh, actually, no. We didn't zoom out far enough. They actually, they did make net income. They made 2.8 million in net income on that, and 80 million last quarter. So they're finally getting net income positive. The free cash flow is pretty ridiculous right here as well. They're making a couple hundred mil free cash flow, but they're just now getting net income positive, and investors are really excited about that. So, yeah, this is that buy now, pay later stock. Do beware if we go into a recession, people just won't pay back some of these loans. They do sell some of the loans they originate, so that's cool. Thanks for the live. Hey, thanks, RA. I really appreciate you, man. Yeah, the McGriddle. Yo, the buns of the McGriddle is like a pancake with syrup in it. It's so good. I love McGriddles. Anyway, my standards are pretty low though. McDonald's probably tastes better because I'm a shareholder. And hey, every time you go to McDonald's and you're a shareholder, 4% of your money goes back to your stock. So you're giving yourself some of the money back. So here's Robinhood stock. Someone said, I do have a Robinhood account, so I've probably given them a lot of fees and stuff, but they're so innovative and they deserve to be at all-time highs right now. If we go and look at what their earnings were, like down here, incredible growth. I mean, the revenue's up 45%. So they made 990 million of revenue, 990 mil of revenue, and 390 million of that was net income. Incredible margins on this company. If we go to the net margin, 40% net margins every quarter. I mean, pretty ridiculous. The margin's growing. The gold subscription is making them a ton of money. And they just sell a bunch of different little products. Every time you just buy something, they make money on that. So like they've introduced like this kind of stuff right here. Like which companies will officially announce IPO this year? You can kind of, whenever you make a thing on one of these, they're collecting a lot of money on this. So I don't do any of this stuff. Hey, what do you guys think these will IPO this year? Market says there's an 82% chance Klarna will IPO, and hey, a Discord IPO would. Darn you, TikTok! I'm not AFK. Okay, and this is saying there's a near 50% chance that Discord will IPO. Anyway, let's go back here. Robinhood's just so innovative. And by the way, I do own some Robinhood stock. You know what? They're actually my best performing stock of all time. I regret every share I've ever sold of them, but check that out. Our 5 shares were up 691% on Robinhood. So not too shabby. We're up $21 on the day thanks to them. What's up in here actually? Let's see. AMD's having a nice recovery from yesterday. AMD's up 5. What's down today though? Oops. What's down on the day? Dang, CPRX down 10. UiPath, huge loser on UiPath. Disney's down another 2. Not too bad. We're barely down on the day. Anyway, Robinhood, innovative company, super growthy, high margin. InnoData, hey, what up, man? Yeah, I do own InnoData as well, INOD. And let's check them out. So InnoData right here, they have had some crazy performance the past 5 years. And here's why I like this one. I do own them, so again, might be biased here, but check this out. The growth of this company, this is all organic, like they didn't acquire a company, but look, revenue's up 100% year over year to 50 million. So really good revenue growth. How about the agility revenue? Hey, that grew 11% as well. So anyway, revenue's had a nice little jump. Revenue's up 80%. Net income is positive every quarter. So they're literally making a couple million every quarter. And what's the market cap? I'm going to guess 1.2, 1.3 bill, 1.36 bill. Okay, so pretty good. I got them right at $1 billion valuation, and they're making a couple million every quarter. Look at this also deleverage of the balance sheet, incredible. So liabilities used to be 57% of assets, now it's only 34 while growing. I mean, great news on InnoData. Here, I'll show you my position in them. Oh, also I bought a new stock today just for earnings. Oh, this is something I normally don't do, but I'm doing a bet on earnings, and it's super small. So I wouldn't even consider it a bet. And I'm mainly just doing it. I'm mainly actually probably going to hold the share if it does good, but I bought 1 share of ticker symbol GDDY. This company reports earnings in 20 minutes. So in 20 minutes, this stock is either going to go up or down a bunch. All I know is for my GoDaddy subscription, they literally forced every person to start paying for this subscription, and they got to be making some sort of money on it. I don't know. So anyway, that'll be my bet. Again, don't follow me. Nothing is financial advice. But I mainly came here to show you my InnoData position. INOD. We got 9 shares of them again. Super small position. But it's fun having small positions in some growthy names that have some good financials. So yeah. All right. VSAT. What's this one? VSAT. VSAT. So Viasat, let's see. They've had some really good performance over the past couple of days. Look at that. So they reported earnings yesterday, and then they gapped up. Let's see, what were the earnings? So, whoa, that's in a pretty good beat. So it looks like investors were expecting 1.1, and then they beat on EPS as well. They were expecting a 62-cent loss of EPS. They only lost 43 cents, and they had a nice little beat on EBIT. So every metric really beat there. That's really good. Um, so I guess that's why the stock is up so much. They just beat analyst expectations. What this do? Yeah, what up, Wonderland? Oh yeah, we can look at Symbiotic one more time. Uh, McD's McDonald's hash browns. Yeah, Mickey D's hash browns are really good. And McDonald's, they just reported earnings. McDonald's showed some huge growth from that Minecraft movie meal. Uh, the Minecraft movie, the products they sold got so much free promotion from like influencers and stuff, random people promoting their how cool the Minecraft McDonald's meal was. Hey, thanks Wonderland for the rose there. I appreciate that. So here's Zeta Global. I think they reported earnings yesterday. Yeah, so look at that. Huge gap up. That's from their earnings, and they were pretty good. They're a really growthy company with a pretty good balance sheet. I mean, if we go to what the analysts were expecting, you see they beat on revenue, they beat on net income, and they beat on EBIT. So it was a triple beat quarter. So they're just having some nice growth, 35% year over year revenue growth, narrowing these net income losses, 55% better. Good balance sheet as well, deleveraged 62% liability ratio to only 38% of the assets. Great news. So, hey, I can see why Zeta gapped up on earnings there. Yoda is showing a potential high at 250 might be good. Yeah, hey, I'm a, again if Sharkwater if GoDaddy tanks after this, it's whatever. I mean, I got one share anyway. So yeah, check this out. Hey, you could get in a oh my gosh. Hopefully that didn't disconnect my mic. Sorry if that was loud. Um, let me move it. So I'm down 1% on the position. I bought it right before the stream. So hey, wish me luck on that stock. I mean, guess we'll see what happens there. Because the other one did not do good today. TSSI, my other really small bet here. Look at that. Hey, luckily we're still total return. We're still up 5% all time, but fell 25% on the day. This company reported earnings today. Again, if we go to the total equity here, these are very small positions. So with some of these, you don't want to have a huge chunk of your portfolio. So let's go to SYM right here, Symbiotic. So what up, Legend? So this is that robotics company that they're a warehouse robotics company, and they have a huge partnership with Walmart. So they're down 15% of the day. To be honest with you, they've had a huge little rally. They just stay at $50 plus. That's great news. That's a win in my book if they stay over 50. I don't think they're going to go under 50. Well, maybe they will. I don't know. But anyway, this is my second favorite robotics company. Amazon would be my first, but Amazon's obviously not a pure play. But they do warehouse robotics for Walmart. That's their largest customer. And Walmart likes them so much that Walmart decided to buy 13, nearly 14% of the entire company. So it's kind of backed by Amazon. They own, or by Walmart. They own 14% of the business, and they have some really nice growth. I mean, after growing 50% the previous year, revenue grew another 25%. They are still losing money, so we do want to see the net income get positive, but they're barely losing any money, so they're fine. So that's a cool robotics play for warehouses. You use bid? I do not, Elijah. I don't know what that is actually. Nebius stock. Yeah, there's another company that reported earnings. That's in the Nvidia portfolio. So if we go to Nvidia's portfolio right here, Nebius, NBIS stock. Again, don't just buy a company because Nvidia owns it. Always do your own research on it. And when we do our own research on Nebius, check this out right here. We can see that they are very growthy. They're still losing some money. So this is one thing you got to be careful with, these net income losses. They're still losing like 100 mil of net income a quarter. But, oh, revenue, please load. Yeah, so here's the revenue growth. This is kind of the best part. Revenue went from 11 million to 55 mil. Incredible growth on the revenue. So, that's what I like to see, a super growthy company. And they're up 20% of the day, probably continuing that growth. Someone said which stock was that? I forget which one. I think it was Symbiotic. Yeah, if you miss anything on the stream, by the way, best way to support me is go to the YouTube channel. My YouTube channel is called Nathan Robert. I'm streaming on there as well. And when the stream's over, you could replay it, or you could replay it right now. So you can like go back if you missed anything. So yeah, YouTube channel is called Nathan Robert. You can just type that into YouTube. Should be the first result. Or the YouTube channel is also linked in the link tree in my bio. Yeah, the best way to support me is to watch the stream from YouTube. TikTok keeps like falsely banning my account and taking down my lives, 3-day live stream bans. So some days I'll be streaming on YouTube and not on TikTok. So yeah, if you want to subscribe to me there, really appreciate that. And by the way, I sell nothing. I have no course, book, Discord, WhatsApp. I sell nothing. Just on here giving my opinion. Definitely not an expert. BYDDF are you talking about that Chinese BYD car company? Because wait. So we just type in BYD. I think the ticker symbol is a little. Yeah, you're right about the ticker symbol, but I think I have to view it through a different ticker symbol. They're crushing Tesla right now. So yeah, here's BYD. This is that Chinese Tesla competitor. That yeah. So we're gonna. They're obviously headquartered in China, so we're going to switch their revenue to USD just so we can get a better idea. Looks like their vehicle delivery sales were only up 0.5%. But let's see net income down here. This is kind of the best part about the company. They're actually making more net income than Tesla is in terms of US dollars. So for the full year 2024, they made 5.7 billion of total net income. Just this quarter, they've made 1.3 billion of net income. So they're really profitable. They pay a dividend too, a 1.3% yield. You know, Warren Buffett and Berkshire Hathaway actually own BYD. They don't own Tesla. I wonder why. Also, let's see, market. Yeah, so 71% of the revenue is in China, and then a little bit outside. Let's see, shareholders. Oh, we can't see the shareholders. Oh well. So yeah, that's BYD. Oh, Apple stock. Yeah, let's look at them. They've had a great past 2 days here. I mean, with that White House thing, you know, did anyone see Tim Cook meet Donald Trump in the White House? Tim Cook literally gifted Donald Trump a golden statue of him. It was kind of funny, kind of weird. But anyway, Apple, after the main news was they're doing a $100 billion investment in U.S. infrastructure for like their own facility. And here's what I love about them. Obviously, I'm on an iPhone. A lot of people are locked in the Apple ecosystem. Half the revenue comes from the iPhone. Then they have this nice services business. So whenever you go spend money in the App Store, you know, buy Clash of Clans gems, they actually take a 30% fee on that. So this is all high margin for them. And we look at the kind of annual growth here. It's nearly 100 billion of annual revenue for them. So that's really high margin for them. That brings the most of their net income. Then they sell Macs. Wearables like the AirPods, watches, iPad. And here's why they're also affected by tariffs a bit. You know, only 36% of Apple's revenue comes from the US, 25% EU, but they're printed money right now. You know, if you go to their net income, Apple's making, you know, you kind of average it out here. Actually, you really want to look at the operating profit. This is the real number. They're making over, call it 25 billion plus of net income every quarter. And what is Apple doing with 25 billion in net income a quarter? Well, this is why Apple's so shareholder friendly. They're spending literally 25 billion of net income every quarter, literally just buying back their own stock. So they spent 20 billion on buybacks just this quarter when their little dividend only cost 4 billion. So Apple has so much room to raise their dividend in the future. They just choose not to because they don't want to be gobbled up by a huge payout ratio. But here's the power of those share buybacks that I'm talking about. So the net income's up 9%, but your return as a shareholder through EPS, earnings per share, is up 12%. So that's kind of the cool power of the share buybacks that I like about Apple. Also, dividend. Ooh, Luffy said Disney stock. Hey, y'all, check out Disney. I do own this one, by the way. Let me go look at their earnings. So I think investors were happy and disappointed with some things. You know, here's the one thing I didn't love is the revenue growth. You know, it's low single digit, 2% year over year, not great, but they expanded their margins by a good amount. This had a little one-time adjustment. So, but basically the free cash flow is up crazy, up 41% year over year. They do have a bit of a high CapEx business, you know, theme parks and stuff. But anyway, this cash flow was incredible. Operating profit is the best it's been in years. So, you know, 3 to 4 billion a quarter. They've really gotten ESPN, Hulu, and Disney Plus really profitable. That's the good news. And the dividend, 1.3% dividend yield there. Nice. So yeah, I do like Disney, a 17 PE. I don't really expect them to outperform the market in the long run. Like, probably won't be too big of a winner, but I do own like 13 shares of Disney, I believe. If it'll load here. Oh well. Everyone should own Nvidia. Oh yeah, we can look at Nvidia too. Then you know what? We'll wrap it up with Nvidia. What software are you using? Oh, hey, Sammy. Yeah, this is a brokerage that I'm on. If you want to get this little software I'm on, it's my favorite one to analyze the company and stuff. You can get this software, this brokerage in the link tree in my bio, the very first link there. It's actually an affiliate link. So if you sign up and deposit $100, we'll both get some free stocks. Or you can just type it into Google. It's called Moomoo. But yeah, link tree in bio, first link if you want to help me out. But here's Nvidia right here. So if you deposit $100, we'll both actually get 5 free stocks. Anyway, but look at this. Here's the PC GPU market share. Obviously, we know Nvidia sells GPUs. They have a 20% PC GPU market share. They have this automotive software. Anyone heard of those Lucid cars? The one that Uber just bought 1.3 billion of Lucid cars from. The autonomy software is actually all powered by Nvidia. I didn't even know that. They're kind of competing with Tesla. But anyway, the data center business is the real winner here. But anyway, the profits here, the net income is crazy. They're making nearly 20 billion of net income every quarter. And at these crazy year-over-year growth rates, what's it going to be this time next year? About free cash flow. Free cash flow is 26 bill, up 75%. So anyway, Nvidia is just a great company. It is tough, though. Here's one thing I will say. If you're looking to double your money on a stock, I don't see Nvidia getting that too easily, because look, right now the market cap is 4.4 trillion. This would have to be an 8.8 trillion dollar company before you get 100% return. So I would be careful about that, but I love Nvidia. The fundamentals are incredible there. They deserve to be the world's largest company. Oh yeah, hey Lawwell. Yeah, hey. If you go to the link tree there, it's the very first link. It's also in the description, I believe. But yeah, Lawwell. I have tutorials on how to use this app as well. Yeah, no problem, Hunter. No problem. Last stock we'll look at here, Duolingo. Here's what, oh yeah, also on this app, you can see like all the super investors portfolio right here, like Nancy Pelosi, you can see all the stocks that she owns, what percent of her portfolio is it, all the literal individual SEC trades if you wanted to see that. But yeah, they have the details for a lot of other, like Nvidia's portfolio. Nvidia owns some individual stocks, like WeRide. I would stay away from WeRide. But anyway, last stock I want to look at, then I'm going to end the stream. I do appreciate y'all being here. If y'all wanted to follow button, we're going to be live the same time tomorrow. And I might be doing a live stream later tonight. So anyway, here's Duolingo. Has anyone heard of that like language learning app, Duolingo? This is their stock right here. And they just reported incredible numbers, beat on revenue, beat on EPS, which is net income, and beat on EBITDA. So triple beat. Most of the revenue comes from this subscription business, which is 83% of the business. And this is why they're so growthy. They literally just grow 40, 50% every year, whatever. No, hey, sorry, Matthew, hey, this is a brokerage right here. This is not the Webull app. This is the Moomoo brokerage. So if you want to get the software I'm on, this brokerage is in the link tree in my bio. First link there for my affiliate link. If you deposit $100, we'll both get some free stocks. But you can still use all the tools for free. Like what I'm doing right now where I'm analyzing this, you could still view all this stuff for free. But if you want to keep stocks in here and stuff, you can deposit $100 and both get free stocks. Anyway, subscription revenue is growing like crazy, and also the advertising revenue. It's up 40% year over year, literally to a new record. So both segments of business are growing like crazy. Free cash flow is up 90 million. Net income's up 83% year over year. Deleverage their balance sheet like crazy from 64% to 36%. It's common for the assets to decline when this happens. You see it all the time with like DocuSign and Zoom and these other companies. But anyway, you can see why they're up 15%. But anyway, hope you guys have a great rest of your day. If you guys why did you say stay away from WeRide if Nvidia is invested? Oh yeah, that's a Chinese company that burns money with no fundamentals. Yeah, I'd be careful with WeRide. We can view them real quick. Let's see. If we go back to Nvidia, just because Nvidia owns a stock doesn't mean you should own it. That doesn't mean it's a good buy. So like RXRX, I'm surprised Nvidia even bought this junk. They lose so much money. And if we go to WeRide right here, hey, Miki, this is a brokerage. It's called Moomoo. Link tree in bio, first link there if you want to use my link. But anyway, here's WeRide, $2.6 billion company, Chinese stock. Let's see. We'll convert the revenue to US dollars just so we can see it. Let's see. What's the revenue like here? So revenue of 17 million, and they lost 50 mil on that. So they do have actually a pretty good balance sheet. I didn't know that. Let's see how much cash they got. So they actually have 800 mil of cash. That's pretty good. But it's not the end of the world for this company, so they can actually afford to do some of these net income losses. But anyway, I just don't see too much blowing me away there on WeRide. They are Chinese. But anyway, hope you guys have a great rest of your day. I'm going to end the stream here if you want to hit the follow button. Oh, yeah, hey, and again, if you want to get the software I'm on, this brokerage, link tree in bio, first link. Anyway, see y'all later. Make sure to hit the follow button because we're going to be streaming the same time tomorrow. So see you guys later. Have a great rest of your day. And thank you to y'all for everyone on the YouTube stream. because I'm trying to build up my YouTube channel, and I really appreciate y'all here because I'm streaming on TikTok as well. I get way more viewers on TikTok, but I do appreciate for all y'all in the YouTube stream. Yeah, see you later, Brendan, Mo, Ryan, Lawel. Hope you guys have a great rest of your day. See y'all later. Thanks again.